I'm going.
Oh, we're live, I think. We're live.
Hello, everyone. Having some technical difficulties, and I'm running late. We're having a good time. We're going to figure this out, hopefully.
Yep. Trying to do the multi-stream here. Tim, did you put the codes? Did you put the key codes in the thing?
No, because I tried to, but it was telling me I needed other information.
Yeah, I gave you. I think the RTMP.
So I got the key code, but when I put the key code in, it wouldn't allow me to do anything else.
Ah, damn it. Okay.
Yeah. And of course, me running late doesn't help the situation, and I think the earnings are dropping literally right now.
Okay.
And I can't even get my camera to work, so I don't even know if I can share it. Can you share it on your end? Because I can't get my camera to work.
Yeah, one second.
I think I heard that there was a StreamYard issue going on. Oh, absolutely amazing.
Okay, my Brian from Tesla Weekend is saying send me the link.
Oh, I'll get him the link.
Okay, let me just go ahead. Tim will send you. Sorry, guys, there's a little bit technical difficulties. Send you the link. Okay, let me just go ahead.
And it's out. It's out. Sorry, so much going on.
Okay.
If Peggy gets this up and running, we'll see it. I'll read through the numbers quick and see. Operating margins, huge miss, 7.6%, not good. Let's see what else we got on here.
Deleted that.
EBITDA margins. No, where's my vehicle margins?
Q3 2023.
EPS non-GAAP is 66 cents. Big miss there. Big miss across the board. It's probably not going to look good. Don't know what the stock price looks like.
Shit. Oh, sheesh. Okay, that's hilarious. Okay, one second. Wait, EPS non-GAAP? Is that what you're saying?
Yes, non-GAAP is a 66 cents.
Whoa.
Big miss.
I can't find this freaking website to bring it up. There it is. Test relations. YAR. Alrighty, there we go. Go ahead and pull it up right now. Cool. Okay.
You got it up?
I got it up. Let me go ahead and screen share this. I think this is it. No, that's the Chrome tab. There we go. Tesla Investor. And there we go. You should be able to see.
There you go.
Okay. So should we go through the profitability or what?
Yeah, go ahead. And I'm going to get Brian on super quick here.
Sure. Alrighty. So we have profitability here, 7.6 operating margin in Q3. Oh my gosh, 7.6 operating margin. Okay. That's not good. Totally not the numbers that I was looking forward to. Okay, so we have 1.8 gap operating income in Q3, 1.9 billion gap and net income in Q3. Then we got 2.3 non-gap net income. 2.3 non-gap, that's not bad. 2.3, okay. Operating cash flow 3.3 in Q3. Okay, free cash flow just under $1 billion. Oh, okay. 3 billion increase in our cash investment. So now they have over 26 billion. Oh wow, that's good. That's really good. Operations energy 4 gigawatt per hour storage in Q3, more than doubled. AI training compute. Okay. Summary, our main objectives remain unchanged in Q3, reducing cost per vehicle, free cash flow generation, while maximizing delivery volumes and continuing investment in AI and other growth projects. I love it when they mention AI because, they're moving away from this car stuff, and hopefully Wall Street can see it that they're not really much of a car company. But anywho, that's down the line. Our cost of goods
and that's the problem. Wall Street's only going to look at these numbers here. They're not if they're not going to show any revenues from it in the next 12 months, it's not going to matter.
Exactly. Our cost of goods sold per vehicle decreased to minus 37.5 in Q3, while production costs at our new factories remain higher than our established factories. We have implemented necessary upgrades in Q3 to enable further unit cost reductions. We continue to believe that an industry leader needs to be a cost leader. Well, we know why they had increased costs, because they had to stop production. So then we have during a high interest rate environment, we believe focusing on investments in R&D and capital expenditures for future growth while maintaining positive free cash flow is the right approach. Okay, so they're going to continue to reduce prices, as we know. Year to date, our free cash flow reached 2.3 billion, while our cash and investment position continues to improve. Alrighty, we have now more than double the size of our AI training compute to accommodate for our growing database as well as our Optimus robot project. Our humanoid robot is currently being trained for simple tasks through AI rather than hard-coded software, and its hardware is being further upgraded. All right. Lastly, with a combined gross profit generation of over $500 million in Q3, our oh wait a minute, hold on a second. Our energy generation and storage business and services and other businesses have become meaningful contributors to our probabilities. Let's go dive deep in this. I want to see. Very curious to see
I
what
say
they did
we
here.
saw we knew that was coming too, and that's what we were talking about on the Q2 call. Was energy is actually starting to make an impact on the bottom line, which is huge.
Oh yeah. Now where's this energy? I'm trying to find this energy. Where is it? Operating margin, income from operations, income, cash expenditures, future. I think it's in the next slide, but let's go one by one. Oh, there it is, energy. So revenue was 1.5 billion. So it didn't go up as high. I think we got to go to the operation statement to see what exactly the profit was. But 40% year over year. Total automobiles only 5% compared to Q3. Well, we know why this quarter was going to be a bad quarter anyways. Services continue to roar up. Actually, no, not really, only just a bit, but 32% year over year. Total revenues only up 9%, 23.35 in Q3. Obviously down because of vehicles not being produced as much. Total gross profits 4 point. Okay, yeah, that's an all-time. Well, not an all-time low, but for the past 5 quarters, that's pretty low. For past 4 quarters, that's pretty low. Just below 4.2. Total gap gross margin 17.9. Yeah, I was around the 17.9s when I was predicting that.
Yeah,
so, okay.
I think Gary had it at 17.7. So
yeah, okay. So that's I mean, that beat a bit, but that's good. Operating expenses, of course, this was going to go up because they're not benefiting from economy of scale. So this was definitely that's exactly what was going to happen. Income from operations.
Right, and we look at the operating expenses. The expenses are the Cybertruck ramping, or at least starting the production, and the Model 3 Highland coming on board, but us not getting the revenue benefits from either of them.
Yeah.
So it's very similar to ramping up and building a new factory where you have the factory expenses hitting first before the revenues come in to offset that. It's just on a very minor scale because they're not building a new factory. They're just building newish vehicles, Cybertruck and then the Highland. So,
yeah, and look at that, incomes from operations. Whoa, just below 1.8. Sheesh.
Big
operating margin. Yeah, operating margin of it. Wow, 7.6. I was not expecting 7.6. I was expecting.
And again, they were expecting an 8.9 to 9.0. So coming in at a 7.6 is well below that. I haven't looked at the stock price yet, but I'm sure it's not looking pretty.
Let's look at it right now, actually, because since can you see it from my screen? Or no?
I can't see it unless you share. But I mean, I'll take a look and share. Unless you guys in the comments want to share what the price is looking like right now while we go through this.
Hold on, let me go ahead and share my entire screen rather than just my one little screen. 1 second. Entire screen. There we go. Let's go. Alrighty. Oh no, you guys can see my entire desktop. Oh. It's very messy. Sorry, guys.
After hours, it's up.
It is up. I know. It's up.
It's up 1%. A massive miss, and Tesla's up. Amazing.
I don't understand.
But you know, though, a lot of it was already priced in. Oh, now we've got Peggy Inception. Nice.
There we go. I'm trying to figure this out. There it is. Okay. Yeah, it's up. Look at what 1.13% up. What the heck? What is that? I don't understand. Why? Somebody please comment or just in the chat. Why is this up? 1.3?
I'm guessing it's because we were down so much on the day, and that's probably why.
And now because we have certainty, I guess that's why. Wow, interesting. Okay, let's move on. So 7.6 margins, that is not good, but I do think this is bottomed. I don't think we can go below 7.6. I do think this quarter is the bottom.
We said we thought 9.6 was going to be the bottom, but I agree with you here because at this point now, Cybertruck and Highland will actually be sold. So we should be able to offset that unless they drop down vehicle margins even more. But
Yeah. So we
hopefully
got
7.6 is the bottom.
adjusted EBITDA, 3.8, adjusted EBITDA margin. I mean, I don't really look at the EBITDA as much, but even that's also down as well. We have net income, gap of 1.8, and then we get 2.3 in non-gap, which I think, well, gap was far below than
Oh,
what I expected, but
Nabashek, Netflix is up. Thank you for sharing that. Yeah, because Netflix has
Netflix.
earnings at the same time, and this is the first time, like historically, well, at least most recently, Netflix went at least a few days before Tesla, if not a week, and they kind of
Yeah.
set the stage for what was happening. This is the first time in my memory that they're doing it at the same time. So that's a good point.
Yeah. Okay. And then we have non-gap 2.3, which was around the, well, that's actually my 2.3 was my gap estimate, not my non-gap. We have the gap of here's the EPS, 66 cents non-gap, which is just an
Yeah.
absolute miss.
Yeah, and I was at 77. I mean, my joking one was 69, as everybody else said too. And even that was too high.
That's ridiculous. I was not expecting. I was actually expecting a beat, but okay, all right. 66 cents. I really want to know. I mean, is it the price? Well, we'll find out. I guess we'll find out why that's the case. We got net cash provided by
David,
operating.
technical difficulties. I'm running late, and then I think StreamYard's having a problem with cameras. I heard about it yesterday. They said it was fixed. I guess not. So that's all right.
Yeah, we tried to
Peggy here to the
multi-stream, but
rescue, so we're all good.
we couldn't. Yeah, we couldn't. Yeah, we couldn't do the multicast stream. We gotta. I mean, we gotta figure it out, Tim. You and I next time.
Yes, we'll figure it out for sure.
Yeah, net cash 3.3, which was really interesting that they came out with more cash than literally since Q4 of 2022, which is
So
very interesting.
the reason being, Elon is extremely fearful of potential recession and things getting even worse than they already are.
Yeah.
And he's been prepping this since the beginning of 2022. You know, he's been talking about this recession thing. I've been talking about it. I thought we were going to get it by now. We sort of got one, but I think it's going to get worse next year. I think Elon is really preparing the company for this. So this earnings right here is kind of like that. Who's going to be tough and see through all of this and see what Tesla is working on, and who's going to sell out and be afraid? No, I can't tell you guys what to do with your own investing. And just justifiably, if you guys think that it's going to get way worse next year and the stock is going to tank and you want to sell and take profits, I'm never going to say no to that. For me, one personally, I'm not. I have a couple of stops in case we do tank hard, so I can protect myself on a few of my shares, but I'm holding the majority of them through all of this. And seeing what Tesla's doing, it's going to come down to, do you have faith in the fact that what they are working on is going to come to fruition? Between energy, which we're already seeing making an impact on the bottom line, Optimus, FSD, Cybertruck, Highland, the compact car, everything that they're working on, that they're preparing for through these ugly times. If you think that they're going to come through on all of it, we're going to be rewarded greatly on the other side. That's my feeling.
Yeah, that's what we're pretty much investing for the FSD and stuff, which I have high conviction for. But capital expenditures over almost 2.5, which is more than the previous Q3. Well, that's because they're upgrading. They have multiple factories now, Cybertruck, all that kind of stuff. So they do need to spend this investment money. Then we have free of cash flow, 850 million, which is, for this quarter, not bad. Not bad. That's really good.
Thinking about Q1 right there being the lowest, and that we know that there was a lot going on in Q1. So, that was when they took a lot of the price cuts initially. So with all of that, considering we're still almost at, $1 billion in free cash flow, with the stuff that they've got going on, I can't complain. I mean, obviously it's not what we're used to, but it's not terrible.
Yeah, that's actually,
And they increased their cash equivalents. I mean, their cash is up to $26 billion. So that's a massive jump.
Yeah, that's crazy. Oh, I think I know why the multi-stream didn't work. I did it through StreamYard, which I should have done it through YouTube. That's my mistake. Damn it.
That's right.
Okay, next time. I just popped in my mind right now. Okay, so we have cash and cash equivalents and investments. Obviously, that's up about 26 billion. which is nice. We need to
Yeah,
see more of
up
this
another
cash
3
position.
billion. So sitting pretty there.
Yeah, that's nice. So revenue, let's see some explanation. So total revenue grew 9% year over year in Q3 to 23.4 billion. Year over year revenue was impacted by the following items: growth in vehicle deliveries, growth in other parts of the business, and the negative parts: reduced average selling price year over year, excluding FX impact, and negative FX impacts of about $400 billion. So yeah, average selling price is the biggest one. I mean, we're seeing Tesla cutting prices all across the board.
Oh yeah.
So this is the biggest part why we're seeing a dip in revenue, even though they did 9%, but it's still a dip in revenue, and of course profits as well. Profitability: our operating income decreased year over year to 1.8 billion in Q3, resulting in a 7.6 operating margin. Year over year, operating income was primarily impacted by the following items: the negatives: reduced average selling price due to pricing and mix. Of course, increase in operating expense driven by Cybertruck, AI, and other R&D projects. So trying to make the factory and the AIs and R&Ds. Okay, so cost of production ramp and idle costs related to factory upgrades. Again, factory upgrades. This is a really good thing, guys, by the way. The factory upgrades, this is what we need to continue ramping up and increasing capacity and to overall improve economy of scale to bring the average selling price. Well, keep the average selling price the way it is, or even go lower, but keep the COGS for each vehicle going lower, which is a very, very big plus for Tesla.
Exactly.
And
And
then,
that's the piece right there. When you see a company that's coming in with higher operating expenses and you're trying to figure out why, well, it's as long as the company's investing that money into the R&D and the things that are going to grow the company in the future, that's important. That's where you want the company to be putting their money. They're not paying down debt with that money. They don't have it. Tesla doesn't have debt. They don't have
yeah,
all these things. So they can put all of that money into the company to grow it in the future.
yep, exactly. Exactly. That's a big plus of Tesla. They have little to no debt, which is just ridiculous for a car company. But anyways, um, then we got the last negative here, which is the FX impact. Only 400 billion, but still it's an impact. The positives: growth in vehicle deliveries, despite the margin headwind from underutilization from new factories. Okay, that's good. Plus lower cost per vehicle and IRA credit benefits. Gross profit growth in energy generation and storage, as well as services and other. I mean, it was a little bit, not too much, but yeah, that's a plus. And as well, growth in credits as well, regulatory credits, which we're gonna see in just. Actually, what was the credits, by the way? If it's up here, oh, where is it? Credits,
I think it's in
credits,
the next
credits.
section down
Is it the
below.
next section? All right, let's go
Yeah.
take a look. Oh, there it is. Yes. No, it's not here either. But anyways, we have SNX, as we saw this on delivery reports. Total end of quarter operating lease vehicle count 176,000. Global vehicle inventory 16 days. So they're still sticking at 16 days, even with all the price cuts. But again, they need more. The more if you want to sell more, you have to increase inventory. I mean, this is just basic, just common sense. So
Right.
16 days is still really good. Solar deployed. Solar is actually down, surprisingly, 49.
Yeah,
And then we
solar itself has still not been very good for Tesla.
yeah. Want to know why, what's going on there? Well, because storage deployed, that's doing really well. 90%. That's actually doing nice. That's really good. Tesla locations. Wow, 25% increase from last quarter three to 1129, which is okay, not bad at all. More, we got the mobile service fleet that's up 20% year over year. Supercharger stations. Now, this is the good part. It was just below 5.3. Now we're just about 5.6. So almost, more than a 300 stations increased, which is absolutely insane. There's a 31% growth year over year from Q3
And
to
then don't forget
Q3.
too, BMW just signed on for 2025 to be part of the
Oh,
NACS
yeah.
also. So you have to remember, again, this is a near-term number. And when you're starting to look out, and Peggy and I have been talking about 2025 as a huge year for Tesla, that's when many of these automotive manufacturers are becoming members of the NACS and adopting it. So that's when Tesla's going to start reaping the benefits of all that as well.
Yeah, let me just do a quick math here. I want to do how fast are they building superchargers? 195
What was it, like
subtract
one
5.
every 11 hours previously? That was the last number I
Yeah.
knew.
So they did 330 in 90 days. So that's about almost 4 stations, supercharger stations every single day.
Wow. So that's every 6 hours. Every
That's
6 hours they're popping one up.
That's absolute ridiculous. Wow. Then we got supercharger connectors,
Nope.
connectors from
So
48,000 to
November 30th
51,000.
is Cybertruck Day. Sorry, we'll get to it if it's on here. We're taking our time going through this, guys. Sorry.
Yeah, we're just a bit late. Usually we're like
We don't
early,
mind the
but
surprises though. Go ahead and share your surprises with us if you got them.
okay. Well, we're getting to that, but yeah, go ahead. No worries. 31% over for supercharger connector, which is good. Vehicle capacity. Okay, during the quarter, we brought down several production lines for upgrades at various factories, which led to a sequential decline in production volumes. Okay, we made a further progress smoothing out the delivery rate across the quarter, with September accounting for negative 40%
No,
or minus
approximately
40%. Yeah.
65. Oh, is that negative? Oh, sorry. Yeah, small
Yeah,
screen.
that's negative. Yeah, of Q3 deliveries this year compared to September, accounting for minus 63% of Q3 deliveries in 2022. Okay. U.S., California, Nevada, and Texas. At Gigafactory Texas, we began plot production of the Cybertruck. All right. I'm wondering when the announcement's going to be.
Which means
Um,
it remains on deliveries for this year. So, and if you look on the right there, they now changed it to Cybertruck
oh shoot!
capacity
Oh
of
whoa!
capacity is 125K, and they're in pilot production. Whereas last quarter, I believe it said in
Okay.
development and with no numbers.
Yeah.
So
Oh, this is actually pretty big. Okay, so they're pretty much saying, without not earnings call here, they're saying that in 2024 they have the capacity to do 125 vehicle production.
right, but they still have to ramp, of course. So they still have to ramp it up to that point,
Yeah,
just
but
like
isn't
we've
this with
seen
the
everywhere
ramping?
else. Looking at um, like the Berlin Model Y, they only have 375,000, which we know full well is 500,000. So
Yeah.
we know that these numbers are usually short of what they actually have the capacity for. So Cybertruck, I think, is more realistically like 250, and Elon has said it himself that they will most likely get up to about 250,000 Cybertrucks a year. Whether they're going to hit 125 next year or not, I don't know. I think 50,000 is realistic for next year. Hey, I'll take anything more than
Yeah.
50,000 though.
Yeah, because what I see here, these numbers are what the current factories are doing at the moment. Is saying production. Of course, we have
Yeah,
pilot production
that's
here.
true. Not capacity. You're right, because Shanghai is definitely pushing 950, if not more.
Yeah. So 125,000. Let's see what they got to say in the earnings call. All right. So
Yeah,
we are expecting the Model Y production rate in Texas to grow very gradually from its current level as we ramp additional supply chain needs in a cost-effective manner. Production of our higher density 4680 cell is progressing as planned. And we continue building capacity for, how do you say this word, cathode production? If I
cathode,
butchered it,
cathode.
cathode production and
Yeah, that's
lithium
the
refinery in
battery
the U.S.
cathodes.
There we go. Okay. So that's that.
And
And we
then
got China
Andrew
here.
here, why is the Europe line short? So the line over there is for market share. So they may not have that data in. I don't know. I thought we did have the data,
For
but
which one?
if you look at the graph on the right,
Yeah.
for the lines, the Europe line is shorter than the rest. So I'm wondering if they just don't have that data in yet for market share for the quarter.
Oh,
I
I
don't
see.
know.
Yeah, maybe it's not complete yet. But just look at the chart. Look at the market share gaining. Huh? Look at that 4% in North America.
Yep. Up and to the right is always where you want to be going.
That's right. That's right. Not like Lucid, but yeah.
Yeah. Oh God, that's just straight down.
Brian from Tesla Weekend just said he's backstage. I don't know.
Oh,
Do you
there he is.
see
I
him?
got him.
Oh, you got him? All right, there we go.
Hey, there you
Nice.
go.
There you are,
So
Brian.
cool.
Nice to
Two
meet
of
you,
my
by the way. It's
favorite
the first, this
people.
is the first time
Nice.
meeting you.
Yeah. We've chatted a number of times digitally. I guess this is still a
Yeah.
digital chat, but yeah.
Yeah.
Interestingly, the aftermarket is not upset.
Yeah.
I keep trying to tell people if you had a crystal ball, it wouldn't help you knowing if you had inside information. I saw a guy accusing people like me and James Stevenson and the others. We must be getting our production and delivery numbers in advance from Tesla.
Oh yeah, yeah,
And
yeah.
I
I
said
saw that comment.
that doesn't make sense because we publish throughout the quarter before it's knowable, when it's unknown and unknowable, and we're often wrong. And even if we had that information, what would you do with it? How many times have we seen a beat and then the stock goes down, or a miss and the stock goes up?
Goes up.
Yeah, and James was so close with his call of $1.02 EPS, so he clearly had all the inside information.
That's awesome. Oh, that's awesome.
Hilarious. Hilarious.
Everybody
So-
got pretty upset today. Everybody knew ahead of time this morning that the stock was not going to do well, so they sold off the entire market because Tesla was going to miss their earnings.
Right. Because that's how things work, you guys. Clearly. Oh,
That's
So
hilarious.
silly.
No, that's. I was expecting a dip down to maybe like 220, 230. If it's Yahoo, oh, there it is. To like 230, but it's up.
Well, don't
actually.
forget, Elon still has to talk. We know that the market hates his voice.
Yeah, that's true. Man, I was hoping. I mean, I was hoping for it to go to 200 for the last time, but I don't know. Who knows? Let's see what happens this week. Let's see what Elon says, like you said, Tim.
that's why we need to replace him on calls with Adrian Bittman. Is that his name? Have you heard the gentleman who sounds exactly like him?
No.
No.
Oh, there's a video on James Stevenson's channel. The thumbnail is of the Spider-Man pointing at Spider-Man meme. And
Oh,
it was
okay.
Dittman maybe, but Adrian was on a space that Elon joined, and Elon was like, "What is this? Is this AI?" And the whole time you're like, "Wait, who's talking now?" Because he sounds just exactly like him.
Wow.
Yeah,
That's absolutely hilarious.
not that that's a good thing or a bad thing. So context I wanted to provide on this slide that's up right now. 950. So 750 is what it says for. Shanghai saying 950, greater than 950. Correct. We know it is. They've been very slow to increase that number. They were saying 450 when we were already seeing numbers that showed 650.
Yeah.
They were saying 750 until now when it was well over 9. And I think 1 million is the real figure, but at least it's closer. And that's before the simplified design of the Highland. So it could be well north of 1 million. Then we've got, let's see, model.
Wow. That.
Yeah.
If you add all that together, excluding the Cybertruck, we get over 2.2 million. If you want to add the Cybertruck, 2.3.
Yeah.
So
Yeah.
okay, well, 2.4 almost. Is this the foreshadow for 2024? I don't know.
Well, the Cybertruck is still going to be a big question mark because we don't yet know enough to determine if that 125 is a beginning of year number, an end of year number, what's going on with it. So it'll be,
I was telling Tim, I'm like, if you have all these numbers capacity here and they're already doing it, I'm guessing what they're saying is for 2024, they could do 125,000 if everything goes according to plan. That's my little theory here. I don't know.
I'll tell you the Texas Model Y capacity should be well over that number. We know at one line they were doing over 3,000 a week, which would be 150 from one line. And they have at least 2, but probably 3 lines. They were building a second and third line. So that number could be triple that. But I wouldn't post that capacity because then the question would be, where are they? And the answer is they're too expensive still. So if we see rates come down a little or the costs come down, which could very well happen because we saw a much stronger cost reduction than I expected, that cost reduction may continue. We know they just shut down for a month to improve operations. If they drop it another 2,000, they will increase production to sell every single unit. So that's, great.
Yeah, that's true. That's a sheesh moment.
Yeah.
So we were at China, Shanghai. We're just reading I don't know. Let's see what it says for Shanghai. Other than scheduled downtime in Q3, our Shanghai factory has been successfully running near full capacity for several quarters, and we do not expect a meaningful increase in weekly production run rate. Okay. Oh, yeah, because our capacity almost. Kiki Shanghai remains our main export hub. And then we got Berlin saying Model Y remained the best selling vehicle of any kind in Europe year to date, based on the latest available data as of August. Similar to Texas, Texas. Further production ramp of Model Y will be gradual. Okay. Now, here is the chart that I've been looking forward to this whole entire earnings report. Look at that. Accumulative miles driven with FSD. Wow.
Yeah.
And
That's
one of the conversations when I was having with Nick was the miles driven data coming in is hugely important, but what's more important is the ability to decipher that data and utilize it. And now with Dojo coming online, that's where this is all going to come into play. And this is perfect because now we have the data coming in and the way to be able to handle that data.
yeah. That's a huge moment. No, I'm just amazed that from what is it from July, because that's when Q3 first month of Q3 is. So we were at 300 million. Now we're past 500 million. That's ridiculous. That's just absolutely ridiculous.
And that candle's going to get steeper.
Oh yeah.
My problem with all the compute power and all the Dojo and the NVIDIA clusters is that they are beyond my capacity to wrap my head around.
Oh yeah.
I know that there are times when having data results in having too much data, an amount of data that's no longer useful. This is designed to separate the wheat from the chaff. It's designed to get you all the stuff you need and none of the stuff you don't. And but I don't know how effective it is at doing that. Not saying it isn't, just saying I don't understand. I do my best, but it's a lot.
All I know is that the steeper this thing gets, the more data it gets, the sooner we can solve FSD. And once we do that, the sooner we can enable it all to all the Teslas around the world that are allowed to use FSD. And just look at that. Just that day is going to be a really good day for Tesla investor. That's all I got to say.
And the huge thing underneath it is the COGS. That's
yeah.
massive.
Wow. Look at that.
So COGS,
that.
and now, I mean, we were thinking before, I thought that was closer to like 36.5, but looking at COGS right now at the lowest they've ever been, and then don't forget, this is going to get lower now with Highland on board, and once we get Cybertruck ramped up and we hit economies of scale there, that's going to drop this COGS down also. So,
yeah.
And
what's crazy is that I thought this number was actually going to be higher than Q2 because they weren't benefiting from economy of scale, but boy, was I wrong. that's
I
a
thought
really
it was
good
going to
sign.
be about flat or maybe a little lower, but this reduction came as quite a surprise to me.
Oh yeah.
Yeah, and when you're looking forward, sure, the operating margins and everything are low, but once they start pumping out the vehicles that cost this much at a much higher rate, that means that profits are going to go back up again. So have we hit the bottom in margins? I don't know yet, but this here is a good indication that we're buffering ourselves to be able to put a little more fat on that margin line.
Yeah.
And as interest rates improve, affordability improves. That is a no-cost way to get a little bit more car into the hands of your customers.
Exactly. So now we're going to have lower cost of goods sold with lower prices. And then when the interest rates start coming down, you're going to make this more affordable for consumers, which means that they're going to come out and buy it. And that gives Tesla that pricing power back that they've been losing over the last year and a half.
Yeah. And what's crazy is what do they say here? Their explanation: despite macroeconomic headwinds, our planned factory shutdown in Q3 and ongoing ramp at new factories, our average vehicle cost was minus 37,500, and we continue to work to reduce the cost further. For very heavy vehicles, a high voltage powertrain architecture brings notable cost savings, which is why Cybertruck will adapt an 800-volt architecture. If I didn't butcher that, wait, sheesh.
You got it.
And now Tesla's back up to 248 for the stock price.
Oh yeah, that reminds me. I did a red background because I was just sure it'd be a bloodbath. There we go, green, better.
Jesus. Wow, with a massive miss on screen. Who could ever guess? All right, let's talk about energy because energy is. I was expecting a good amount of profits on this one. So energy storage deployment increased by 90% year over year in Q3 to 4 gigawatt per hour, our highest quarterly development ever. Continued growth in developments was driven by the ongoing ramp of our mega factory in Lathrop, if I can
Lathrop,
Lathrop.
yep.
Lathrop, okay, California, toward full capacity of 4 gigawatt per hour with the phase two expansion. Production rate improved further sequentially in Q3. So, sheesh moment right there. Sheesh moment right there, indeed. I was expecting at least 1.9, not 1.5, but or 1.6 to close, but that's still ahead in the right direction.
And
Um,
I think the expansion rate is limited by the sheer number of cells that are actually available. You can't just go and order them off the shelf. You need to make calls in advance and get the people out there. You know,
Yeah, and
get
then on top of it, this is, don't forget lithium. They're ahead of schedule when it comes to lithium refining, so that should hopefully help them get those cells produced even faster.
Mhm.
yeah. Okay, interesting. So we've got solar here. Developments declined on a sequential and year-over-year basis to 49 megawatt. Sustained high interest rates, and the end of net metering in California have created downward pressure on solar demand. Yikes. Okay, and then we got the services and other businesses here, which is they're in the green, they're good, but down this quarter. And let's see what the explanation is. As our global fleet size grows, our services and other businesses continue to grow successfully, with supercharging, insurance, and body shop and part sales being the core drivers of profit growth year over year. Pay-per-use Pay-per-use supercharging remains a profitable business for the company, even as we scale capital expenditures. Our team is focused on materially expanding supercharging capacity and further improving capacity management in anticipation of other OEMs joining our network. Nice.
Yep. And
And we
again,
got
don't forget, this is the toes dipping in the water and the breaking of the ice for partnerships between Tesla and Legacy Auto. It starts with a supercharger network. As soon as we get to FSD and they all
oh yeah,
recognize the exact same thing, they're going to be coming on board for FSD, and that's a much bigger nut that they're going to have there.
that's gonna be a sheesh moment. That's gonna be a crazy moment. I tried to run some numbers and it hurts my head, just like what Brian said. I mean, it's you can't like how can like even with robotaxi, like how can you like be so precise? Like how would you know? It's hard to do it until it actually happens. But huge moment. We got the volume outlook here. We are planning to grow production as quickly as possible in alignment with a 50% CAGR target we began guiding to in early 2021. In some years we may grow faster and some we may grow slower depending on number of factors. I hope everyone who's listening here gets that. For 2023, we expect to remain ahead of long-term 50% CAGR with around 1.8 million vehicles for the year. So they're still saying 1.8 million. I personally I think they could go over 1.8 million in Q4. I do think it's going to be a monstrous delivery. It's going to be a record for sure. I think it's going to be like, if not 500, at least like 490,000 deliveries. What do you guys take on that?
I don't see a reason why not. The one problem is, of course, the Cybertruck numbers are likely to contribute very little to the total count in Q4, but fine. Let's just look at Model 3. The 3 Fresh out of Shanghai should be moving at full steam by now, and the line is not expected to come down for retooling until at least late December in Fremont. So that means those numbers should be unaffected. They might even be just a little higher, as they often are. And then you've got Model Y volumes continuing to increase because the price cuts only just took effect. So we're likely to see better Y numbers, solid or better 3 numbers, and then S and X are just not contributing a whole lot. So this
Yeah.
is all tailwinds as far as I'm concerned, I think 490 is quite doable.
Yeah, and thinking about, the Highland, you have to remember all the production that they did, and we don't know how much that was in Q3. None of those were delivered. So they were either on boats to Europe or sitting in China waiting to be delivered because they had to get approval. So we're going to get maybe get a big push in the beginning of Q4, may not notice it, but we've got that lump chunk that's coming over. And then what I heard, and Brian, I don't know if you can confirm this, I heard that production capacity for the Model 3 is supposed to hit about 120% of where they were prior to the shutdown going into October, which means that if production goes up and the demand is truly there for it in China, that could bump up numbers significantly as well. I know right now Wall Street's looking at 491,000 for Q4. I'm slated at 495,000, right in line with that. So I think 500,000 is possible. Whether they're going to get there or not, I don't know. Maybe Elon does a nice little push at the end of the quarter to try and get some prices cut and some deals set to clear out inventory to push that. We shall see. But I do remember, God, I think it was 2020 when they hit 490 something thousand, almost the 500,000 mark for the year. And now here we are just a few years later, going to hit it for a quarter.
Yeah, it's bonkers. It was 499,950, I think, something like that.
Yeah.
And or 9, it was something. It was very high. So capacity is expected to increase for the new 3 because of efficiencies. I don't know if it's 20%, but even if it's 10%. The other thing we've seen is, like you said, a whole bunch went out that were not delivered in the quarter. They will be delivered. And because they're not selling them in China yet, that means they've got a front-loaded quarter going to Europe, and they're going to do a localized delivery wave at the end. Yes, we're bringing back a little bit of the wave, but it will be ironed out. It'll be settled out in coming quarters, as it always does. It'll be unwound. But that means that you should be able to get just about 100% of Model 3 production from China sold in Q4, including the ones they made in Q3. So that's very exciting.
Now, Brian, I do remember back in December when we heard the first rumors about the Highland and Shanghai getting shut down, which were spot on with timing. And when Shanghai was getting switched over to the Highland, I heard at the same time that Fremont was going to be following shortly thereafter. And we had discussions about how Tom Ju being over there and Fremont was kind of overseeing this and planning it all out. Do you think they're going to end up doing the Highland switch in Fremont this year or wait till the beginning of next year?
I think it'll be January. I think he really wants this quarter to be a banger, and taking the line down 2 weeks, 3 weeks early could impact that. But also it looks to me like, so if you look at the schematic type drawings, there's pictures of the Model 3 Fresh that show the frame itself. They're renderings, but it paints an accurate picture. The way the stamped steel works, it looks as though it's designed to eventually have a casting instead in a way that would be simple to replace. Shanghai does not have that casting, but we've seen a casting building being installed, being built. They finished the foundations. They're putting it up now in Fremont. They may plan to launch the 3 Fresh in Fremont with the Giga castings, which are not yet available. So that's another good reason to delay it. Why start stamped and then switch a month or 2 later when we can just launch it that way from the get-go, while also keeping production high from the lines that exist as they are.
Oh, true. Yeah. And it makes sense. Pushing it off to Q1 of next year, just, yeah. Let's finish this quarter off strong.
Yeah. And this year off strong.
Yeah.
And hit our guidance.
Yes.
When is guidance starting, by the way?
In order to hit guidance, in order to hit the capacity, it's 491,000, I believe.
No, not that.
No, 475. You're right, 475.
Sorry. The earnings call is what I'm asking. Does it start
that starts at 5:30. We got time.
Oh, 5:30. Okay, cool. We got time. So 491. Okay. Now I'm just gonna make it simple and put 500,000 before I run the numbers. I don't know. It's 500. I really wanted to hit 500,000. It's gonna be like, oh, whoa, look at this, 2 million annual run rate.
It's fun.
All right.
Let's see what else we got here.
Yeah, we got cash. We have ample liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we'll manage the business such that we maintain a strong balance sheet during the uncertain period. So as you said earlier, Tim, that they want to keep a strong, a lot of cash just in case if anything happens, and they can fund the projects as well. Alrighty. So we have the profit here as well. While we continue to execute on innovations to reduce the cost of manufacturing and operations, over time we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. In other words, FSD, robotaxi, all that good stuff. And product. Cybertruck deliveries remain on track for later this year. Okay, so we are still going to get Cybertruck deliveries this year.
You haven't gotten to that part? You haven't gotten to that part? Page 13. Go now, please.
Yeah, we were talking about it before. November 30th is going to be the delivery event.
Oh, we actually. Oh,
boom! Right there, top of the page.
Delivery beginning in. Oh shoot! So beginning in 2023. Alrighty.
Yes,
well, I think this is why.
Over on X, there's an official event page now as well.
Yeah.
I'll go check that out. That's okay. That's good. I think this is probably one of the reasons why it's going up. The stock's going up because they're actually saying Cybertruck's are actually coming this year, and they actually gave a rough date as well, like a broad date, in November.
Yeah, November 30th is the official event. Whether they're going to deliver any before then, I doubt it. If it is, it's selective, but November 30th is the official release.
Oh, that's nice.
So
that's
exciting.
Nice.
I'm so anxious. I can't wait. And what's crazy is the rumored pack sizes I've heard on this are in the 120 kilowatt hour range, which would make it fantastic if that can work. We've seen Tesla pull off some efficiencies that others just can't touch. Because if you think about it, you could get 3 Model Y packs out of 1 Hummer pack.
Yeah, that's crazy.
That's crazy. What are you doing? Why would you? Okay.
It's okay. These things will be rolling billboards. People.
Yeah, for sure.
It's gonna be amazing. Can't wait to see them on the road. I mean, even in Canada, we won't have them. First, it'll be the States, and we'll see. Here in Kuwait, we don't even have a single Tesla here yet. Well, we do, but it's maybe like 50 or 100 of them are here only.
We're gonna have.
People are
going
to have to drive. People are going to have to drive across the border just to show off.
Yeah, that's true. That's true. Yeah. Well, let's see. If they could deliver 125,000 by end of 2024, that's gonna be nice.
Yeah.
All right, these are subsidies. I don't think that's all right. We got some cool images. That's what is that? That's 1 million. Okay, Model Y produced. Wait a minute. 1 million Model Y produced. This is new. Is this new, or am I just tripping?
No, that's the Shanghai. So yeah, that's I haven't seen that one. I saw the 2 millionth Model Y produced globally recently, but that's the 1 millionth out of Shanghai alone.
Ooh, okay. Sheesh. There we go.
That factory is so new.
Dude, that factory, like I joke about it, but like every time I see stuff like this coming out of Shanghai, it reminds me of the Family Guy episode with the Amish putting up the barn. Mm-hmm. That's just how fast they operate. It's unbelievable.
That's crazy. That's okay. Cool. So we have 1 millionth of that. All right. Let's go next.
Real quick, we did skip some pages when I told you to go up to 13. Oh, did you check them already?
It was
we've been going slow.
Okay.
Yeah.
Just making sure I didn't force you to skip some quality content here, guys.
And I apologize to everybody who's on here and we're taking our time. We started with technical difficulties. I was running late from work. It wasn't a good time. So thank you guys for being here and enjoying this time with us anyway.
Yeah.
Well, I wouldn't say they're enjoying their time, but they are here. And that's
thanks for biding your time. Thanks for choosing to be here with us. We appreciate that.
Okay.
Yeah, I managed to drag a couple people over from my channel. Hi, Jamie. Hi, Andrew.
Alrighty. So, key metrics quarterly. We have vehicle deliveries, of course. I mean, this is not going to matter in next year or the next 3 years. No one's going to remember this quarter. It's gonna be always we're gonna look back in 3 years' time and say, oh wow, Q3 was like that. We're looking at bigger numbers now.
Yeah, and it's silly because people concerned, well, the Cybertruck being delayed by a month really concerns me. Does it? Can you tell me how your life would be different if Model 3 had come out 1 month earlier or later?
Oh, for them
man,
a lot.
I know for sure I'd be at least an inch taller and I'd have more
Yeah.
hair.
Oh my God, that's funny.
That's how it works. That's definitely right.
Operating
Yeah,
cash flow.
you're right. Just like this quarter here, when we look back at it 5 years from now, are we going to remember this quarter? Probably not. We may remember it as, dang, I wish I bought more at this quarter, but other than that, that's it.
Yeah, you remember the milestones.
Yeah.
And it's all about the trend, not the details.
You know what's interesting, guys?
No.
Look at this. Look at this. Technicals. I'm not in technicals, but I just matched this in my mind. And it's weird. You see how the net income and everything is going down, and there's a big peak and it's going down. Look at the stock price. It peaked and it's going down. Now it's flattening. Just to show you how forward looking the stock market is. That's what I'm saying.
Yeah.
Which is really interesting because like this actually happened and the stock went down too. I don't know that's I'm just looking at it that way.
Well, it's because Wall Street looks out 6 to 12 months. That's it.
Yeah. So that's interesting.
And really, they tried to drive by looking in the rearview mirror.
Yeah,
true. And and as much crap as we do give them for their forecasts, as Troy put out there when he's putting out the accuracy of people's numbers, they're actually not that bad. The street consensus is relatively accurate. Very conservative, very much on the conservative side, but pretty accurate.
Yeah, we just bashed them. We just bashed them because they don't look too long term in the future. That's the only thing.
I will split it into two ways and say the first part is for financials, they're very good. For production and deliveries, they are an absolute clown show and should not be listened to, because they will come up with assumptions, and I'm looking at it saying, because when I was saying that the deliveries would be down, and Wall Street saying no, we know about the downtime in Shanghai. I'm like, right. Do you know about the downtime in Texas? The Shanghai delivery production downtime, everyone knew about. It was in the news. But you have to watch the drone footage or follow Joe Tetmeyer on X if you want to know that production was offline for a month in Texas. And they just don't. They miss it.
So the way I look at it too, with Wall Street being, accurate with their finances, but terrible with deliveries and production, I've seen over the last 2 years that it seems like a lot of people on Wall Street don't even bother doing it because so many people in the community do it for them. So now they can be more accurate with their financial numbers because they can get a better accurate number about production and deliveries from guys like us. So why bother putting in that work?
Don't.
Well, some of them do. The amount of people,
us.
There's a lot of people on Wall Street that are subscribed and patrons of Troy. And we know that he's relatively accurate. You, James, and they're part of James's as well. So these guys are looking at James, and I mean, he was off by 59 freaking deliveries. So when you've got a guy who's going to be that spot on,
he was actually off by like 180, but because he just rounded, he might have been off by 1,000. He just gave over a rounded number, his actual production number. He clarified when I gave him kudos on X, but he wasn't quite that close, but he has been that close before. The reason I think they're not using those numbers is because they're still wrong. They're still less right than those of us doing, I was, of the guys, you might recall, of the YouTube and X prognosticators this quarter, I was the least right, but still vastly more correct than Wall Street. That's not good, you guys. But the truth is, that number doesn't affect the stock.
Nope. It's EPS, which they are more accurate with. That actually is going to change the financials, production and deliveries. If they miss, they miss. Who cares? Because it doesn't matter if Tesla misses by 20% on deliveries. What's the bottom line? What's that EPS number?
Yeah, that's all they care about.
So I came in late, Tim. Is there a
Yeah.
reason you're invisible?
Yes,
Have you
that was the technical difficulties. StreamYard had been having
Oh.
problems. I got confirmation that they were good to go. I hopped on, and because I was running late, didn't have time to figure it out.
Yeah, and we tried to
That's-
set up a multi-stream on my channel, and that didn't work either. So it's like, all right, whatever.
Yeah. Yeah.
Hold on, I
yeah.
might.
Yeah, it's worth a shot. So what I wanted to ask is, how are we feeling about free cash flow?
Dude, so we were talking
mean-
about that before, and the fact that sure, it's not what we were used to, but the fact that we've seen the way the quarter was going, and they still pulled in almost $1 billion in free cash flow. I'm good with that. And putting another $3 billion to the cash stockpile, I'm cool with that.
Yeah, right. And while getting ready for the Cybertruck, while adding to their compute power, while spending a lot of money, very carefully, very strategically, but still spending a lot of money, and it's still a pretty healthy pile of cash.
Exactly. And as we were talking about before, what's going on, his big fear for the recession that's potentially coming that he's been thinking about for a year and a half now. Maybe it's coming next year, but he's getting ready for it. And if we do get that, Tesla's ready.
Yeah.
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 So wow. Yeah. That's that. What is this chart? This chart is very interesting. So we have trailing 12 months, revenue, okay, and we have operating margin. Do you guys think this is the bottom quarter?
Hey, I made it.
I know that guy.
Oh yeah.
What do you mean by the bottom quarter?
So do you think this is the last quarter we're going to see like margins hitting a bottom?
I don't know. It just judging by the 3 Fresh and the Cybertruck now actually, well, the Cybertruck not so much this quarter, but the Highland potentially actually hitting the bottom line. I think that's going to be potentially the bottom, because with the COGS down and then the vehicle sales on top of it, just depends on if they're going to keep cutting prices or not.
And that's my take is, this could be the bottom if that is their objective, but I don't think that's their objective. I think their objective is to move more units, and that could require additional compression of the margin. 17.6% is a good margin. That's still industry leading.
Yes.
And if we can increase sales by 5-10% just by going another 2,000 off, let's do it. Because at the end of the day, as nice as margins are, I don't pay my bills in percentages. I pay them in dollars.
Correct.
Sheesh.
That's my take.
Wow. And I'm just surprised if there we go. Yeah. Wow. It's maintaining. It's not. It's up, but I mean, wow.
Yeah.
That tells me. I mean, my price target for Tesla for this year is 260, and the fact that it's with missed earnings and it's going up. I mean, let's see how the week will go, or what Elon says, like what Tim said, but it's very surprising to me. I don't know. That's why you can't time the market, guys. If you're listening, you guys, nobody can time the market, especially Tesla stock.
Yeah.
Especially Tesla stock.
That's why
And
if you want to be a Tesla investor, have a Warren Buffett mindset. You're holding this forever.
I would add to that the Tim Oracle method, which is whenever you've got the opportunity, buy the share then, dollar cost average. It's as good as you're going to get. You will get the average price for the year. You will not get the bottom. You will not get the top. You will get the average.
Yes.
Yeah. And you know what's crazy? I think it was Amit who posted this on X. It showed Warren Buffett or Berkshire Hathaway holding 53% of Apple stock.
It's 53%. Yeah, 53% of their portfolio is Apple. Now that's ridiculous because they bought a lot back in 2016, and obviously the stock appreciation brought them to this point.
But then, I mean, my point is that diversification. I mean, if you're really diversified, you wouldn't have a stock being more than half of your portfolio.
Oh,
you know what I mean?
Warren Buffett's not about diversity. He's about find a company that is going to provide you a great return. That's
true.
a solid company, and buy it. he doesn't play those percentage rules of I can only have 5% of my portfolio and blah, blah, blah. He doesn't play that crap. It just falls where it falls. And if he believes in the company, he's holding it. That's it. He's done.
And that makes sense because he bought a ton for a great price. It became 53% of the portfolio of Berkshire. And he's not ready to sell it because the story isn't done.
Yeah.
And I can see that. That's
Now the question is, when is he gonna dip his toes in Tesla?
I think he feels like he missed the boat.
No, he doesn't,
don't
strictly
think?
because if he felt that way, he would have said the same thing about Apple. Because right now we are in basically, let's say Apple 2009, maybe 2008 is where we're at with Apple. So, give Tesla, if Warren Buffett makes it to the end of the decade, that's probably when he would dip his toes into Tesla. Because think about all the things that we are excited about that still haven't come to fruition yet. FSD, the actual supercharging, energy taking off, Optimus. If we get robo-taxis on the road and we start seeing the revenue growing from that, that's when Warren Buffett would take a look at it and say, all right, what can we do here? But until that happens, he's not going to care.
Yes, that's my exact thoughts. And I think just in general, FSD, because that's just going to be a software as a service, right? That's what's going to just wheel in the cash, wheel in the profits. So I think that's when he'll go like, hold on a minute, it's a cash flow company. Why would I not buy it? Even if it doubles, that's fine, So I think you're right there, Tim. I think you read my mind right there.
Yeah, and not only that, but the credit rating, they just became, investment grade. There's still a few steps that they need to go through before they can get there. In Warren Buffett's eyes, Tesla is a good, strong company, but it's not the mature company that he would be investing in.
That's true. He even said a couple of times, I mean, it's funny, he never invested in Microsoft, even though that was his best friend, Bill Gates. He never invested in Microsoft. He never invested in Google, and he wished he bought Microsoft and Google. I mean, he said he's not good with tech companies. He doesn't understand them. But
yeah, and he buys what he knows. So he doesn't do tech. He doesn't do pharmaceutical stuff. He doesn't know them. Yeah, so exactly. I can't blame the guy. That's I mean, obviously he's successful for a reason. And his investing philosophy is invest what you know, invest in good companies, and hold them forever.
All I know is Tesla. So that's it.
Well, and I will agree with that. As I know we're being funny, but that's true. Every time I've tried to make an investment outside of something I know really, really well, it's burnt me.
Yeah.
It's hard. It's hard because it's a whole different world. Absolutely whole different world. You have to learn it. I mean, here's the thing. When I first came into the stock market, I got burnt a couple times. But then I learned how not to get burnt. And I think this is how it is with any industry. If you want to get into, for example, real estate, if you want to do it properly. Now, obviously, real estate, it's hard not to go wrong if you hold it for a long time. Not if you want to. I mean, anything you hold for a long time as well. But if there's something that you want to learn and you're trying to dip your toes in, and you haven't been burnt, have you really learned?
Right. There was a guy. I can't find this story now. I've looked, but there was some guy who was like a professional athlete who made a bunch of money as a professional athlete and then decided, I'm going to dip my toes in the water day trading. And he got lucky on a couple of option calls and convinced himself that he's actually gifted at predicting the future, at gambling. And so he kept shorting Tesla and until he literally ran all the way down to zero. And he said, well, this is the end of my story, but it's not the end of the story because the rest of you guys are going to ride this pig all the way into the ground. And I'm going to, I'm out. Of course, I have to be because I don't have any money. And I'm thinking, all your money you made was as a professional athlete. You can't go back to that line of work.
Yeah.
At the time, I want to say he was a tennis coach or something. And if you got lucky early, that's almost worse because you can convince yourself that you're much smarter than you are. When it comes to buying individual stocks, my advice for people who have the audacity to interrupt my day by asking is don't buy individual stocks. Don't buy them. Don't buy it on my advice or anyone's because unless you are engaged, you will not do as good as the professionals And if you look at the track record of the professionals, they rarely beat the market,
Yeah.
and rarely by much. So yeah, even like I bought ARC K, and
Yikes.
that yeah, and that was a little bit of, but that was to me a calculated risk. That was me saying, rather than ask my friends what they're excited about, I'll ask a professional what she's excited about. And there's some moonshots in there that could still pay off. It wouldn't take very many of them doubling or tripling to get me close to my cost basis. But I didn't put much in, and I've done sufficiently well on Tesla. The big thing for me was in 2019 when it dipped, I saw something that the experts couldn't see. And when people said earlier this year, "Oh, I bet you wish you sold when it was over 400," I said no, because I still see something that they still don't see.
Yep.
And that's the FSD, that's the energy, that's the dojo, that's that's all this stuff. Any one of, there's a good 20 companies in here that if they were spun off into their own thing, you'd still consider putting some money just into them.
Yeah. And you think about, in hindsight, sure, we can also say, oh, I would have loved to sell there and swing trade. If I could have perfectly timed the top and bottom to make the profits, absolutely I would have. But you can't.
Of course.
Because in that time, we were having that discussion over $1,000 that we're never coming under $1,000 again. Guess what? We came way below that. So, it's just, and as David's saying here, Tilray, he was at around 30. It was about half the price compared to the all-time highs. Didn't think it could go much lower. It's now $1.98. So
what is that one?
Tilray, that's I think a cannabis company, I believe.
Oh,
yeah.
So, and like, look at Lucid, look at a lot of the companies that we thought, and now obviously Lucid maybe not a good example, but
No.
even Tesla itself, Tesla itself,
Maybe shorting it.
Thinking about the prices it was at, everything we knew that was coming, and we still, we did the split and still pulled down to $100 after splitting to 400. So it's one of those things where the macro environment's going to do things that you do not expect. And what is your long-term horizon? And
there was only 2 times where I've made a 10x on my money. Only 2 times, and that was pure risky. But with not like only with $1,000 or $2,000 because it was too risky. The first 10x that I made was when I invested in weed stocks before we had our current prime minister Justin Trudeau elected, because he was like, if I get elected, I'm going to make weed legalize weed, and he did. But that was, sell the news,
buy the rumor, sell the news,
whatever that. Yeah. So I'm okay. Before he gets elected, or before whatever happens, I'm just gonna buy like $1,000 worth of the stock of this weed company. I think it's called Tweed. And then he got elected, and the thing roared 10x. And then I sold, and now it's like back to near to its all-time low, which is just ridiculous. The second time that I made 10x was when I invested in VTIQ. Who remembers VTIQ?
no.
I do remember that, because that was one I was going to get into, but I chose not to because it was way too risky for me.
It was so risky, but it paid off. It was a 10x. It was hilarious. Do you know which one? Do you know what VTIQ is, Brian? Do you remember it?
No, I don't.
It's
which one is that?
Nikola before becoming Nikola.
Oh.
Yeah,
of course.
That was when it was still the SPAC.
Yeah.
So on Lucid, I had an opportunity to speak with a number of suppliers who deal with them. And I also got to speak with one insider who shared with me a number of problems from the corporate level in terms of repairability. So the problem that they, and I made a video trying to warn you, boneheaded clowns. And I was saying the problem they had is, you have to ask, if this little company has a level of performance and efficiency that no one can touch, how? And the answer is, they are not designed for failure. They're optimized like a race car. Because that's what they did, is they made race cars. So if you're only optimizing for that level of performance, that's what you're going to get. And when there's any problem with it, if your front motor fails at 10 miles an hour, it destroys the motor, blows the battery management system, and fries the pack. It's a $70,000 repair.
Ooh.
Yeah, that's bad.
It is, and you say, right, but that's very rare. right. But when it happens, it's a problem. And I tried warning people this, although their warranty reserves are at something like 5 or 6% of their warranty payouts were already at 5 or 6% of sales already after having only sold like 8,000 cars. It should not be that high. And their warranty accrual rate is, I want to say, 7.5%, which is very high and likely to be nowhere close to enough. So the point of this is I will sometimes meet insiders. And when I say meet, I mean meet. If I can't verify who you are and have a discussion with you, the rumors don't get published ever.
Yeah.
So I had a chance to meet a Lucid employee who gave me a bunch of very juicy inside information upon which I called BS. And it all turned out to be BS. What had happened was he knew who I was and he was trying to give me misinformation that made them look better. I said, well, why are you so excited? He goes, because it's a better car. It's a better car than the Tesla. I said, in which aspect? He goes, it's faster. It's got a higher top speed. I go, that's the Sapphire. That's not out. He goes, yeah, it is. We're already selling them. And this is in July. I'm like, no, you're not. No, we are. Okay. I'm going to throw out everything you've said because that is the most ridiculous. If there was one on the road, it'd be the biggest news. And they're now available for order, but they certainly, so the point is I vet my sources. And when these people came back to me and said, look, you just hate Lucid because you're a Tesla fanboy, I point to all the other videos I've made praising cars, praising other cars that are not Tesla. But when it comes to Lucid and when it comes to things like the Hummer, yeah, I put up a picture of the Hummer and the Lyric with just the title Turds because I got to ride in them at the Detroit Auto Show. And all I could ask is, who is this for? And when you look at the sales, the answer becomes clear. No one.
Yeah. And as Gary mentioned himself, when it comes to the Lucid is, sure, the Sapphire is going to have a higher top speed and it's faster, but this economy right now is not the market to be selling a vehicle like that. So who cares what the top speed is? If you can't afford it, nobody's going to buy it, as clearly we have seen. So that's the problem that Lucid is running into right now. And as Gary said, he's like, you know what? You can advertise all you want, but if you're going to advertise a bad strategy, it's not going to make a lick of difference.
Can I share something? Can I share something about Lucid? I think this would be very interesting for you guys too. So I met a guy here in Kuwait who owns a Tesla Model 3, and he knows the people that bought the stake in Lucid in Saudi.
Nice.
So I'm like, so what's with the deal? Why do they have so much stake in Lucid, and what's happening? He's like, look. They tried to do it with Tesla, but Tesla wouldn't allow the Saudis to buy more than 5%. So the Saudis weren't interested. But Lucid was like, yeah, you can buy as much as you want, which now they're like, what, 65%? They own the company at this point. So the idea is what they're trying to do is they know they can't compete with Tesla. They know they can't, be mass produced like Tesla. Never. The reason why they keep funding Lucid is what he's telling me, and apparently this is one of the reasons why they're doing it, apparently, is that they're trying to make a charging infrastructure in Saudi using Lucid's technology. Because why? Because they own the company. They want to have control over it. So the idea, the goal here is to have control over it, not to have the best or whatever, is to have control over it. Once they establish this, he says, watch, as soon as they establish the charging networks and the infrastructure they need for EVs in Saudi, they won't care about Lucid. They would say...
That actually fully supports my theory on all of this. So that obviously explains why Lucid has not joined the NACS. And when you look at Elon discussing how Tesla is going to be bigger than Saudi Aramco and Apple combined, Apple is basically the vehicle itself, the EV. And then the charging station is Saudi Aramco. That's going to be the new gas stations. That makes full sense for Saudi Arabia to do this because that's where their next thing is going to be. They know that the world is going to be changing from gas over to electricity. They need to get ahead of that game. And so by jumping on it with Lucid to create their own charging network, that makes a lot of sense and fully supports what I was thinking this entire time. So I get that because they see that's where the money is, not in the vehicles. You're not going to make the profit in the vehicles. They know fueling vehicles. What's the future going to be? Fueling vehicles through charging stations. That's where they're putting their money. Okay.
But the question is, how good is that going to be? I mean, we're already seeing version 4 for Tesla coming out, and I don't know how, I mean,
well, according to Sweet Peter Rawlinson, he's thinking that they have a much better charging capability than Tesla does, but do they really?
Okay.
And
that's
and is it going to matter, or is it going to be like, VCR and beta, where beta is like, hey, it's a good technology, but it's going to just get swallowed up by Tesla?
And that's where it absolutely is. That's where it absolutely is, because it doesn't, there's that, well, Tesla can't charge as fast as Lucid can accept. It's like, great, but if there's only 3 stations left to charge your Lucid, who cares? It won't matter. And V4 chargers are already out. I think, the Saudi Arabian sovereign fund is a little annoyed that they blew it. When they had the chance to take Tesla private, they absolutely should have. They would be the ones printing money for themselves now.
Oh yeah, yeah. 100%.
And it would be a scandal. It'd be a scandal. Why is this American company giving so much money to a country, but hey, that fell apart. So, and they have no one to blame but themselves, I think. So,
but I'm sure they'll figure it out, because they'll take on the charging. And even if they say, hey, you know what, the way that we were going to do it, we have to scrap, and we're just going to do it the Tesla way, but still produce our own chargers, may still end up coming that route. So I think in the future, in the next 10 years, I have no doubt we're going to see a lot of that. And seeing as they have, their footprint all over the world with gas stations, I had mentioned this a year and a half ago, we're going to start seeing a lot of these gas stations getting converted over. We see a lot on the highways already with both charging stations and gas stations. I think we're going to start seeing that locally. And then eventually we're going to see just full charging stations and no gas anymore.
Mm-hmm. Yes. Yeah. And
I can't wait.
Take a long
time though.
Yeah. So Karav is in the chat, and he would like us to each sum up the report that we just got in one word. Tim, why don't you go first? You're at the top of the screen.
So hold on. Before we do that, is it before we dived in deep in the financials, or we just saw the EPS and we're just like, oh, what's the reaction off that?
After our full view of everything that's going on, what is your one-word reaction to it?
Okay, full view. Okay, so
my full view reaction is acceptable.
Mine would be fine. Yeah, mine would just be fine. It's fine. The numbers are fine.
Yeah, mine would be sheesh.
As always.
Oh god, it's funny.
Oh man.
Well, when it fits, it fits.
Yep, and as Karav said here, and we didn't get to it yet, but yeah, energy margins around 25% is great. So again, as Tesla pointed out, that hitting the bottom line and actually making an impact on the bottom line, we started to see it in Q2 a little bit, but definitely much more this time around, especially more this time around, considering the EVs weren't making as much of an impact. So when you have energy continuing to grow on top of a quarter of shrinkage when it comes to the EVs, it's going to make a bigger impact, which is nice.
Yeah.
It's a $500 million of revenue. It's 125 million of profit. 13 weeks, they're making $2 million a day in profit from stationary energy.
Yeah.
I'm okay with that.
Yeah. And don't forget, energy is eventually going to eclipse EVs when it comes to profitability. And that's still going to be dwarfed by FSD, which is in turn going to be dwarfed by Optimus. So we're starting to see these things come to fruition. Yeah. I will be back in a hot second, guys. Continue chatting. Chat amongst yourselves.
Yeah. Okay, sure. Okay. Let's go finish up. I'm going to finish up the statement of operations.
Yeah.
The number that I have up here is the profits for energy. I was so curious about energy to see what the profits were. So it was what? 1,559 for the energy generation and storage, and then we've got the energy. There it is. Yeah, we got the energy generation and storage for the cost of revenues minus that 381. I think in Q2 it was 350 something, 352. So it looks like it was like a 9%, 8% increase, which is not too bad. What's interesting is the cost is going down. So I'm not too sure if it's just this quarter alone or is this going to continue. But overall, that is a profit or gross profit margin of 24 and a half, which is really nice, which is really good.
Really nice. Yeah.
Really good. And that's actually really good. Yeah, that's nice.
And it looks
Okay.
like just from the Lathrop factory, there's no reason volumes can't increase incrementally. I don't think we're going to see, doubling or tripling because the facility is probably approaching the point where capacity is going to be reached. But
Yeah.
there's no reason we can't see additional megapack factories put together and rolled out in other locations. These factories go up very quickly because it doesn't need the same, it's not nearly as complicated of a machine as a car. A car is very complicated, where
Yeah.
a megapack is a lot simpler. The
That's
only
true.
moving part is a fan.
Facts. Okay, so this is the whole segment operations. We've got the balance sheet. I mean, we know we got 26 billion in cash. It's absolutely a crazy moment. That's a sheesh moment. And they're gonna continue this heavily. They're gonna try their best to hoard as many cash as they can. We got their liabilities, and okay, that's good. As long as their assets are growing much faster and much more than their liabilities, that's not a big problem. Statement of cash flow, we saw that up there as well. Okay.
Oh, what did they have for credits? I didn't see that.
Oh,
Credits.
over 500 million.
Oh, it was that many? Okay.
Oh, it's huge.
Oh,
Dang.
554. 554.
I thought it was going to be more just because of the fact that legacy auto just wasn't producing as much as they thought they would.
And their ICE sales have recovered.
Oh, that's true too. I forgot about that. That's a good point. Yep.
Yeah. So they have more to sell and they have more units to offset with it. And
Yeah.
you remember, it was not that long ago that everyone was saying, all the clowns were saying, these credits, yeah, they're helping them now in 2019, but these are gone. They're done. In a year or two, they're going to have so many EVs of their own, they won't need to buy credits and they will go away.
And then the next conversation.
How'd that work out?
Nope. And then the next conversation after that was, well, Tesla's relying on the credits, and that's the only reason that they're successful. And then as soon as Tesla didn't need the credits anymore, they're like, well, that's just making the numbers look better.
Right. And
at this point,
remember,
I wish that
Oh,
legacy auto was good and they didn't need the credits anymore.
So the 2 points I make on that, the first is James Stevenson's point, which is there's still dollars. Those are real dollars. Those are available to everyone. If you and I start a car company, we get those dollars too. And the second point is the reason Honda or Fiat Chrysler or whomever is buying those credits is because it's cheaper than paying the fine. So if we're going to back it out of Tesla's numbers, we need to back it out of their numbers too and assume that they would have paid the full fine were it not for Tesla. No one says Honda is only profitable because they get to buy ZEV credits, even if that's true, because they've got a razor thin margin, those guys.
True. Hold on, guys. I'll be right back. I made me some pizza, and if we were here all together, I'll be sharing it. But nonetheless, I'll share with
Very
you guys virtually.
disrespectful.
Yep.
Sorry,
And I'm going to
sorry.
switch this over to the live stream.
Yeah. And when it goes live, I'll just mute myself.
And then I got to remember how to get this into. Actually, is this good enough? How do I get it into studio mode, Brian? I can never remember.
Oh, I don't really. I haven't used StreamYard much.
Well, no, on YouTube, because on YouTube, if I try to do a full screen on this,
it goes the wrong size.
It'll black it out.
Yeah, you're in the bigger size. I would just.
I mean, I could leave it like this. It doesn't matter. It's just audio. It's not like we're watching anything, so
Yeah.
I'm not concerned.
See, what I would have done is put up much funnier other tabs.
Well, so in the past, I've had some inappropriate tabs up there. So
What I enjoy doing is whenever I show a screenshot from a search engine, I will have something very funny in the search, as if that's what got me there.
yes, are boogers green?
Well, no, it'd be like, who's that crazy lady leading GM into the ground. There'll
Oh,
be a
yes.
story about GM.
The big ol'
Yeah.
MB.
What's the curb weight of that big, fat, juicy car out of Detroit? This GM, the Hummer. Yeah. I like to have fun, Tim. Did you know that?
Fun? No, zero fun, sir. I still work for, I trade time for money, so fun is limited.
Oh, yeah. No, that's why I've got my OnlyFans. You know that.
Yes. Yes, I subscribe to your feed regularly.
Yes, I told you that, right? That it's the good news is that my American fans apparently have a foot fetish, and luckily my European fans also have a centimeter fetish.
Yes. Only feet.
That's a
Oh, golly.
anyway.
Yeah. So, I mean, overall, and actually, where's the,
So what are you expecting to hear on this call? What are we other
I
than
mean,
dates? Yeah.
I mean, obviously they're going to tell us about the Cybertruck event, which, looking through the say questions, I figured that, we were going to get the answer. The first one was the Cybertruck production for next year. I'm guessing they're going to say 50,000. Somebody asked about when they're going to get delivered. I figured we were going to find out before then anyway, and sure enough, we did. So November 30th. And yeah, as Karav says, I want to hear the new CFO. I'm actually curious about how. Oh, I think we're on. Let me know how the volume is, guys, when it comes out. Let's see if Tesla has better technical abilities, being a tech company. I guess they're not good right now. Good job, Tesla. You're awesome.
Exasperating, right?
This is pretty much how the earnings went.
They can do an over-the-air update to improve the braking distance of your car, and then they stream on a potato.
they're using a Nokia phone that they're all sitting around to stream this.
I've connected to a string with a tin can.
They're not even using Starlink, for Christ's sake.
It certainly doesn't seem like it.
Like, I think they've got enough money. Elon, you can spend a couple $1,000s on this. It's okay.
I mean, can't we just have Dave bring his from home?
I mean, just making sure I'm not muted here. No, I'm not muted. It was playing perfectly fine before.
All right.
I can hear a little something. Yeah, just crank it, Tim. And
Literally
we'll just
nothing.
wait and see. Right. Well, someone will tell us in the chat.
We believe there's still
Oh yes, I can hear it.
improvement there.
There we go.
Regarding autopilot and AI, our vehicles now driven over 500 million miles with FSD beta, full self-driving beta, and that number is growing rapidly. We recently completed a 10,000 GPU cluster of H100s. We think probably bringing it into operation faster than anyone's ever brought that much compute per unit time into production, since training is the fundamental limiting factor on progress with full self-driving and vehicle autonomy. We're also seeing significant promise with FSD version 12. This is the end-to-end AI where it's photon count in, controls out. Or really you can think of it as there's just a large bit stream coming in and a tiny bit stream going out, compressing reality into a very small set of outputs, which is actually kind of how humans work. The vast majority of human data input is optics from our eyes. And so we are, like the car, photons in, controls out, with neural nets, just neural nets in the middle. It's very interesting to think about that. We will continue to invest significantly in AI development, as this is really the massive game changer. And I mean, success in this regard in the long term, I think has the potential to make Tesla the most valuable company in the world by far. If you have fully autonomous cars at scale and fully autonomous humanoid robots that are truly useful, it's not clear what the limit is. Regarding energy storage, we deployed 4 gigawatt hours of energy of storage products in Q3. As this business grows, the energy division is becoming our highest margin business. Energy and service now contribute over $500 million to quarterly profit. The Cybertruck, and a lot of people are excited about the Cybertruck. I am too. I've driven the car. It's an amazing product. I do want to emphasize that there will be enormous challenges in reaching volume production with the Cybertruck, and then in making the Cybertruck cash flow positive. This is simply normal for when you've got a product with a lot of new technology, or any new vehicle, brand new vehicle program, but especially one that is as different and advanced as the Cybertruck, you will have problems proportionate to how many new things you're trying to solve at scale. So I just want to emphasize that while I think this is potentially our best product ever, and I think it is our best product ever, it is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. Often people do not understand what is truly hard. That's why I say prototypes are easy, production is hard. People think it's the idea, or you make a prototype, you design a car, and as soon as they're designing a car is just anyone can do it. It does require taste. It does require effort to design a prototype. But the difficulty of going from a prototype to volume production is like 10,000% harder to get to volume production than to make the prototype in the first place. And then it is even harder than that to reach positive cash flow. That is why there have not been new car startups that have been successful for 100 years, apart from Tesla. So, I just want to temper expectations for Cybertruck. It's a great product, but financially, it will take, a year to 18 months before it is a significant positive cash flow contributor. I wish there was some way for that to be different, but that's my best guess. So really the demand is off the charts. We have over 1 million people who have reserved the car. So it's not a demand issue, but we have to make it. And we need to make it at a price that people can afford. Insanely difficult things. In conclusion, we continue to focus on ramping production while maintaining positive cash flow. And we continue to target and expect to have around 1.8 million vehicle deliveries, as stated earlier this year. The Tesla AI team is, I think, one of the world's best, and I think it is actually by far the world's best when it comes to real-world AI. I'll say that again, Tesla has the best real-world AI team on Earth, period. And it's getting better. And lastly, I wanted to thank all of our employees for making a lot of extra effort during uncertain times. Thank you very much for your hard work and the impact that you're making.
Thank you very much, Elon. And our CFO, Vaibhav, have some opening remarks as well.
Thanks, Martin. Our vehicle deliveries in Q3 outpaced production, and we had yet another record quarter of profitability in our energy business. Congratulations to the Tesla team for the continued focus on operational excellence as we navigate through a period of economic uncertainty, higher interest rates, and shifting consumer sentiment. As Elon mentioned, our Q3 operational and financial performance was impacted by planned downtimes for our factory upgrades. This was necessary to allow for further factory improvements and production rate increases. Despite such factory shutdowns, our cost per vehicle decreased to approximately $37,500. We saw sequential decreases in material costs and freight. Reducing the cost of our vehicles is our top priority. On the operating expenses front, R&D expenses continue to rise due to Cybertruck prototype builds and pilot production testing, combined with spend on AI technologies like full self-driving, Optimus, and Dojo. We have and will continue to make investments in these areas, and hence our capital expenditure and R&D will continue to grow in the near term. However, our focus is to continue making investments through positive cash flow from operations. This year itself, we have generated operating cash flows of approximately $8.9 billion and free cash flows of approximately $2.3 billion. Our other businesses are becoming more prominent on a standalone basis, with energy business leading the charge primarily from the growth in megabyte deployments. Our services and other businesses on a year-on-year basis also continue to show positive momentum as we benefit from our growing fleet. As regards our pricing strategy, in addition to what we have shared before, I want to elaborate that most car buying happens with one or other form of financing, and hence we also view pricing in terms of monthly costs for the customer. And therefore, as interest costs in the US have risen substantially, it has required us to adjust the price of our vehicles to keep the monthly cost in parity. We've tried to offset such adjustments via our focus on reducing costs. However, there is an inherent lag in cost reductions, which in turn impacts margins. To that extent, we recently announced a partner vehicle leasing program in the US, whereby you can get a standard range Model Y for as low as $399 a month. In conclusion, as we navigate through a challenging economic environment, we're focused on reducing costs, maximizing delivery volumes, and continuing making investments in the future, in particular AI and other next-generation platforms. We believe this strategy positions us well for the long term. Once again, I would like to thank the Tesla team for their efforts in the last quarter.
Thank you very much. And now let's go to investor questions. The first investor question comes from Craig. How many Cybertruck deliveries do you anticipate for 2024?
It's difficult to make an accurate guess at this point. Going back to what I said earlier, that the ramp is going to be extremely difficult. Like I said, there's no way around that. If you try to make, if we just try to do some copycat vehicle design, of which there are literally 200 models that are slight variations on a theme in the combustion engine world, just distinctions without a difference, then it's really not that hard. But if you want to do something radical and innovative and something really special like the Cybertruck, it is extremely difficult because there's nothing to copy. You have to invent not just the car, but the way to make the car. So the more uncharted the territory, the less predictable the outcome. Now, I can say that if you say, well, where will things end up? I think we'll end up with roughly 250,000 Cybertrucks a year. But I don't think we're going to reach that output rate next year. I think we'll probably reach it sometime in 2025. That's my best guess.
Thank you. The second question is, can you provide a progress update on the 4680 cell, particularly progress towards performance improvements and cost savings outlined on Battery Day? Thank you.
Sure thing, Martin. 4680 cell production in Texas increased 40% quarter over quarter. Congrats to the Texas team for producing their 20 million cell off of line 1. Texas is now our primary 4680 facility. We're heavily focused on quality. Scrap is down 40% quarter over quarter. With the increased volume and yield improvements, cell costs consistently improved month over month within the quarter, although we have a lot more work to do to achieve our steady state goals. And that is our priority. The Cybertruck cell with 10% higher energy than our Model Y cell started production on line 2 in Texas. This quarter, we convert to building 100% Cybertruck cells to simplify and focus the factory as we ramp all 4 lines in phase 1 over the next 3 quarters. Phase 2 of the Texas 4680 facility is currently under construction. The additional 4 lines incorporate further capital efficiencies over phase 1, and our target is for them to start producing in late 2024. Lastly, in Cato, we're retooling to enable large-scale pilot runs of our next-generation cell designs. Cato's long-term goal is to be the launch pad for new cells, 1 generation ahead of our mass production facilities, enabling faster iteration and smoother ramp-ups of new designs.
Thank you. The next question from institutional investors, could you please provide an update on capacity expansion plans for companies' factories in Berlin and Austin, and the opening schedule of Gigafactory Mexico?
Berlin and Austin factory, the current priority is actually maximize the output from our existing lines by laser focus on efficiency improvements. As always, maintaining a high quality and reducing per unit cost will be as critical as growing the production volume. For Mexico, we're working on infrastructure and factory design in parallel with the engineering development of the new production that will be manufactured there. That's all I can share for now.
In Mexico, we're laying the groundwork to begin construction and doing all the long lead items. But I think we want to just get a sense for what the global economy is like before we go full tilt on the Mexico factory. I'm worried about the high interest rate environment that we're in. I just can't emphasize this enough that for the vast majority of people, buying a car is about the monthly payment. And as interest rates rise, the proportion of that monthly payment that is interest increases naturally. So that's if interest rates remain high, or if they go even higher, it's that much harder for people to buy the car. They simply cannot afford it. And we are tracking, I believe, at this point for Model Y to be the best-selling car on Earth, but not just in revenue, but in unit volume. If you compare that to the other vehicles that are, number 2 and number 3 and whatnot, they cost much less than our car. We're just hitting law of large numbers situations here. I know people want us to advertise, and we are advertising. I think there is something to be gained on the advertising front. I don't think it's nothing. But informing people of a car that is great that they cannot afford doesn't really help. So that is really the thing that must be solved, is to make the car affordable, or the average person cannot buy it for any amount of money, or they simply can't afford it. They can't afford it. So this is a big deal.
Okay, thank you very much. The next question is, when do you expect Model 3 Highland to be available in the US? I just wanted to address that, unfortunately, we don't answer product-related questions and timings on earnings calls, so let's go to the next one. Current sell-side consensus assumes that Tesla will deliver 2.3 million vehicles in 2024, representing 28% growth versus 2023 guidance. Is this growth rate achievable without any mass market launches in 2024? And when does Tesla expect to return to its 50% long-term CAGR?
Thanks for the question. When we look at 2024, there are a lot of moving pieces. Elon just talked about what is happening in the macroeconomic environment. So we're focused on growing our volumes in a very cost-efficient manner, and are carefully reviewing all our options, and we'll be able to provide a much more meaningful update at our next earnings call.
Yeah, I mean, the risk of stating the obvious, it is not possible to have a compound growth rate of 50% forever, or you will exceed the mass of the known universe. But I think we will grow very rapidly, much faster than any other car company on Earth by far.
Thank you. Next question is, do you have an approximate timeline in mind for the robotaxi, driven or non-driven, What excites you most about how this project is progressing?
Well, the robotaxi is like necessarily non-driven. I guess I'm very excited about our progress with autonomy. The end-to-end, nothing but nets, self-driving software is amazing. I drives me all around Austin with no interventions. So, you know, it's clearly the right move. You know, so it's I don't know, it's really pretty amazing. And obviously that same software and approach will enable optimists to do useful things, and enable optimists to learn how to do things simply by looking. So, you know, extremely exciting in the long term. As I mentioned before, you know, given that economic output is number of people times productivity, if you no longer have a constraint on people, effectively you've got a humanoid robot that can do as much as you'd like. Your economy is quasi infinite, or, you know, infinite for all intents and purposes. So, and I don't think anyone's going to do it better than Tesla, not by a long shot. Boston Dynamics is impressive, but their robot lacks a brain. They're like the, you know, Wizard of Oz or whatever. It means. Yeah, lacks a brain. And then you also need to be able to design the humanoid robot in such a way that it can be mass manufactured. And then at some point, the robots will manufacture the robots. Now, obviously, we need to make sure that, you know, there's a good place for humans in that future, and we do not create some variant of the Terminator outcome. So we're going to put a lot of effort into localized control of the humanoid robot. So you know, basically anyone will be able to shut it off locally, and you can't change that even if you. With like a software update, you can't change that. It has to be hard coded.
Thank you. The next question is, why was the price dropped on FSD if it is getting better and robotaxi is expected so soon?
Well, we just wanted to make it more affordable, so more people could try it. I think over time the price of FSD will increase proportionate to its value. So I would regard the current price as a kind of a temporary low.
Thank you. The next question is again on FSD. Mercedes is accepting legal liability for when its level 3 autonomous driving system Drive Pilot is active. Is Tesla planning to accept legal liability for FSD? And if so, when?
Well, there's a lot of people that assume we have legal liability, judging by the lawsuits. We're certainly not being let off the hook on that front, whether would like to or wouldn't like to. So,
I mean, I think it's important to remember for everyone that Mercedes' system is limited to a few roads in Nevada and some certain cities in California. It doesn't work in the snow or the fog. It must have a lead car, marked lanes, only 40 miles per hour. Our system is meant to be holistic and drive in any conditions, so we obviously have a much more capable approach, but you know, with those kind of limitations, it's really not very useful.
you know, I think some people understand the profundity of the Tesla AI system. Most people, very few. It's basically baby AGI. It has to understand reality in order to drive. Baby AGI.
Thank you. The next question on Optimus. Will Optimus be working on Gigafactory lines next year? If so, how many would you guess will be deployed?
I think at this point we are not ready to discuss details of the Optimus program, but we will provide periodic updates online. So as you can see, where Optimus a year ago could barely walk, and now it can do yoga. So a few years from now, it can probably do ballet.
Sounds good. And the last question from investors is, neural net path planning represent a significant advance in capability and safety for FSD. What steps is Tesla taking to make this technology available outside the US?
Yeah, our approach has been to try to get it, the more places we try to make it work, the harder the problem is. So the reason we don't do it in all countries simultaneously is that it would take much longer to make it work anywhere at all. So that's why it's currently just North America. And also for most parts of the world, you have to get approval before deploying things. Whereas in the US, you can deploy things at risk, or at least you take liability for what you deploy. So it's whereas most countries require some sort of extensive approval program. So we only want to go through that extensive approval program when we think it's kind of ready for prime time in that country. I apologize that it's not in those countries, but we keep finding ways to make it better, and it needs to drive such that it exceeds the even unsupervised, significantly exceeds the probability of injury of a human, or significantly better. It's a lower probability of injury than a human by far. I think we're tracking to that point very quickly. Obviously, in the past, I've been overly optimistic about this. The reason I've been overly optimistic is that the progress tends to sort of look like a log curve, which is that you have kind of rapid initial improvements, and that if you were to extrapolate that sort of rapid, fairly linear rate of improvement, you get to self-driving quite quickly, but then the rate of improvement curves over logarithmically and starts to asymptote. That's now happened several times. I would characterize our progress in real-world AI as a series of stacked log curves. I think that is also true in other parts of AI, like LLMs and whatnot. Series of stacked log curves. Each log curve gets higher than the last one. So if you keep stacking them, keep stacking logs, eventually you get to FSD.
Thank you. Let's now go to analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great. Thanks so much for taking my question, and thanks for all the updates today. We learned earlier in the call, it sounds like you don't think the truck will ramp to significant volume until its third year of production. Should we have a similar anticipation for the ramp of the next-gen platform, or is there any reason that we should be maybe more optimistic or pessimistic about the ramp profile there? Thank you.
Yeah, I mean, to be clear, it's not really the third year of production. It's kind of like the 18th month of production is roughly my guess. So it's just that it'll happen is that it starts this year, spans next year, and gets to 2025. So technically there are 3 calendar years in there, but there's actually only 18 months, not 3 years. I would be very disappointed if it took us, and that would be shocking if it took us 3 years. But 18 months from initial deliveries to reach volume and reach prosperity with an immense, I can't tell you how much the blood, sweat, and tears level required to achieve that is just staggering. I've been through it many times. And then here we go again.
Similar path for the next gen platform?
I mean, there's like unique complexity to cyber.
Yeah. I mean, Cybertruck is, yeah, I mean, we dug our own grave with Cybertruck, you know, nobody, in general, I find like nobody digs their grave better than themselves. And so, you know, it is, you know, Cybertruck is one of those special products that comes along only once in a long while. And special products that come along once in a long while are just incredibly difficult to bring to market, to reach volume, to be prosperous. It's fundamental to the nature of the newness. So now the sort of high volume, low cost, smaller vehicle is actually much more conventional.
In terms of like the technologies we're putting into it, we didn't have to invent how to bend full hard stainless steel or have mega 9,000 ton castings or the largest hot stamping in the world or new high voltage.
And we're done.
What happened?
Not on my end. Must be the same problem they had in the beginning.
Maybe they're also having problems with StreamYard.
Yeah. I mean, unless anybody else wants to try to bring it up, maybe it is my end. I doubt it, though. Everything is running as normal.
Something.
Evolutionary quite in the same way as the Cybertruck. I think it will be quite a fast ramp. So as Lars was saying, we're doing everything possible to simplify that vehicle in order to achieve a units per minute level that is unheard of in the auto industry.
Yeah, I mean, the simplification makes it easier to automate. It also makes it lower cost. Yeah, it's intrinsically lower cost.
Yeah. Let's be clear, it'll be cool, but it's utilitarian. It's not meant to be, you know, fill you with, you know, awe and magic. It's to get you from A to B. And it'll be so beautiful, but it's utilitarian. It's a utility.
Doesn't have 14 inches of travel in its suspension.
Yeah, as an example. Yeah. So, I mean, the Cybertruck has a lot of bells and whistles.
All right, thank you very much. Let's go to Pierre Ferragut from New Street Research.
Hey, can you hear me fine? Yes?
Yes.
Hey, I have first a follow-up question on FSD and pricing and adoption. So I agree with you that as FSD improves, we should see its value increasing. But I guess the ultimate values of FSD, which is to be able to handle a robo-taxi, is not going to necessarily interest everybody. And you have a bit of a degraded version that would be like a chauffeur service where the car drives by itself, but you still have to be in the car and around. And then there is the hands-on, eyes-on version of the service. And I guess, there should be much lower cost, lower feature kind of variants of the service that could have a very large penetration on your install base and more expensive one that would remain at a lower penetration level. So I'm just wondering if you're taking that. And last but not least, like the simplest version of FSD are available and are going to work from a technical perspective probably before like the ultimate robotaxi version can work, if ever. And so I'm wondering how you take that into account in how you're thinking like the financial contribution of FSD over time, and whether you could evolve your pricing along that kind of tiers to increase adoption.
Yeah, I mean, a fully autonomous vehicle, I think here you know, sort of the economics of a fully autonomous vehicle are truly astounding in a positive way. When you look at passenger vehicles today, they only get about 10 to 12 hours of usage per week. That's, you know, if you drive an hour and a half a day on average, that's roughly 10 hours a week out of 168 hours. And then there's also, you got to have parking and insurance. You got to take care of the car. It's like there's a lot of overhead. So, I mean, yeah, it's like the economics of the system are just insanely positive. If given that the car, like all of the cars we're making and have made for a while, we believe are capable of full autonomy. So then if you're able to say increase the utility of that car by, I don't know, a factor of 5, which still only means that it's being used for maybe 50 hours a week out of 168. So you're still assuming that still assumes less than a third of the hours of the week is doing something useful. You've increased the value of that by 5, but it still costs the same. Like you have something, then we're a hardware company with software margins.
Pierre, do you have a follow-up? Yes, I'll have actually a follow-up on a different topic for you, Vaibhav, if that's okay. It's about like your gross margin in the quarter. Could you give us a sense of like in how the gross margin evolved sequentially? How much was the impact of idle costs? How much was like the sequential benefit, I imagine, of production ramping at Berlin and Austin? And then I saw like this massive jump in energy storage, very strong positive surprise. So if you can give us the background on that and tell us, you know, how we should think about that gross margin going forward.
Okay, thanks for that question. So in terms of, you have a few different aspects of your question. So if I just look at from Q3 perspective, you know, obviously factory idle time had an impact. It did impact by, I mean, I won't give you the exact percentage, but it had decent impact for the quarter. And, you know, when you look at the other pieces which we're trying to do, we did see certain of our other factories ramping up pretty well, right? And they actually contributed pretty well to the margin for this quarter. In fact, one of the factories came pretty close to, in terms of per unit costs, to where we are for some of our other established factory, which is Fremont. So that was a positive in the quarter. And when it comes to energy margins, you know, Megapack deployment was the key driver there. And that product has done well. I mean, on the cost curve also, we've been able to do a lot there. But I do want to caution that, you know, Megapack deployments are a bit lumpy. So yes, we had a great quarter this period, but depending upon where we are trying to deploy that product in different markets, you would see periods wherein there would be downward pressure on deployment because of us trying to get the product to that exact place where
product in transit. Yeah.
Yes.
Yeah.
Okay, thank you very much. Let's go to Rod Lash from Wolf Research. Rod, feel free to unmute yourself.
Thanks. Really nice to see the rate of vehicle cost improvement despite the downtime that you took. You've taken now about $2,000 out of the average vehicle cost over the past year. Can you give us maybe a sense of the rate of improvement that you see from the changes that you alluded to, the factory changes you alluded to? Is there a way maybe to convey the speed of improvement on your existing product from here? And then related to that, can you share the timing of your next gen, the lower priced product that you talked about earlier this year?
Yeah, so just in terms of product margins, there are lots of puts and takes when you look into this. You know, there are certain things which we control, and there are certain things which we don't control. You know, we expect that we'll get some benefits from our cost reduction efforts, which are all underway. But on the other hand, we just finished our factory upgrades late in Q3. Some of these factories are still in the early ramp phase in Q4. We're still not up to where we want those factories to be, so they'll impact in the near term. Plus, like Elon mentioned, we're going to be ramping Cybertruck, which is going to be another headwind which we will be dealing with. On top of all that, you know, there's overall uncertainty in the macroeconomic environment, which even makes it harder to predict precisely as to where we land. But yes, this is something which, you know, it's an evolving thing which we're observing every day and reacting to it on a daily basis.
I would just say that on the cost reduction efforts, like we are unflagging in our pursuit of additional cost downs for 2024. We do have a good pipeline of them and work on both the engineering side and the factory operations side. And, you know, our intention is to like maintain or exceed the trend that you saw. We're trying as hard as we possibly can.
The timing of the next gen product, can you share that?
Not at this time.
Okay. And just as a follow-up, obviously price is also a driver of demand, but that's obviously not happening in a vacuum. And you mentioned that, I think you mentioned it at some point during this call that you're also maybe hitting the law of large numbers on some of your products. Can you just share how you're thinking about price elasticity just at this point and in this macro environment, and any thoughts along those lines?
I think that there's very significant price elasticity. I mean, to be totally frank, if our car costs the same as a RAV4, nobody would buy a RAV4. Or at least they're very unlikely to. It's worth noting that a lot of these incentives, like the tax credit and whatnot, they're actually very difficult for the average person to access because most people do not have 10 grand, or even $7,500 burning a hole in their bank account. Large number of people are living paycheck to paycheck and with a lot of debt. They've got credit card debt, mortgage debt. So that's reality for most people. It's sometimes difficult for people who are high income earners, and I'd say high would be like someone who's earning over $200,000 a year, to understand what life is like for someone who is earning $50,000 or $60,000 or $70,000 a year, which is most people. So that, like for a lot of people, like these tax credits just they can't front $7,500 for 18 months or even 6 months to get for the tax credit, and they actually don't in some cases even have that. They don't have $7,500 in taxes. So so it's really just the vast majority of people is how much money do they have to pay immediately and how much per month. That's it. And you can stop right there. And a car is still much more expensive than a RAV4 when you look at it that way.
Yeah, one other thing which I'll add, when you look at, car buying in general, We're trying to get to the next set of EV adapters. And they use
Not an EV adapter, just
next,
who wants a great car?
exactly.
It's not a, sometimes you get these like, honestly, I'd say it's like somewhat correlates with the why doesn't everyone work from home crowd? I'm like, this is like some real Marie Antoinette vibes from people that say, why does everyone work from home? Like, what about all the people that have to come to the factory and fill the cars? What about all the people that have to go to the restaurant and make your food and deliver your food? It's like, what are you talking about? How detached from reality does the work from home crowd have to be? While they take advantage of all those who cannot work from home. So, you have to say, like, why did I sleep in the factory so many times? Because it mattered. So I just can't emphasize how important cost is. It's not an optional thing for most people. It is a necessary thing. We have to make our cars more affordable so people can buy it. And I keep harping on this interest thing, but it just raises the cost of the car. We're looking at an internal analysis, which we think is more or less on track, that when you look at the cost or the price reductions we've made in, say, the Model Y, and you compare that to how much people's monthly payment has risen due to interest rates, the price of the Model Y is almost unchanged.
If you factor in the change in interest rates.
Yes, which is that's what I'm trying to say. The thing that matters is the monthly pay. It's how much money do they have to put down, and do they literally have that in their bank account, or will it check bounce? And then what is the monthly payment? And it doesn't matter if that monthly payment is principal, interest, or whatever. It's just a number, and that number has to not cause their bank account to go negative. That's it. So, going from near zero interest rates to the current very high interest rates, the actual monthly payment is basically the same. It's just a bunch more of it is going to interest. And there are some incremental challenges beyond that, which is the difficulty of getting credit at all has increased. And so the number of people who simply cannot get credit, period. Even if they've got a job and everything's solid, the banks are, a little gun shy on handing out credit, given that a bunch of them kicked the bucket earlier this year.
Yeah, there's also just fewer options. Even if they want to hand out credit, there's
Fewer banks to go there. It's like, does your bank still exist?
Yeah.
Well, if your bank does not exist, you have to establish a relationship with a new bank. So a lot of regional banks are, died, and even Credit Suisse. Geez, that was a shocker. Got a 160-year-old-ish Swiss institution that doesn't exist anymore. That's mind-blowing. I think there's still quite a few shoes to drop on the bad credit situation. Commercial real estate obviously is in terrible shape. Credit card debt has been rising significantly. The credit card interest rates are usurious. Over 20% interest rates, meaning which over time is just, it becomes obviously extremely punishing. Because if somebody's paying 20% interest on their credit cards, it means they cannot pay them off. And if you cannot pay them off and you're still accruing interest at 20%, that's headed to a bad place.
Thank you. Let's go to next question from George from Canaccord.
Thank you for taking my question. Just to focus on the cost per vehicle, coming down in future quarters, as you discussed in your written remarks. I'm curious as to what the levers of that could be, Is it more scale, more factory utilization? Is it material cost reductions? Is it things like gigacasting? I mean, can you just kind of give us some data points to give us confidence that that's going to come down over time? And if I can sneak one in, please. There are press reports, and I know how perilous it is to believe some of these, but they say that you've included radar as an option in some Model Ys in China, and I'm just here to ask if that's true, and if so, why? Thank you.
We've not included radar. We have radar as a Tesla designed radar as an experiment in the Model S and X. That's it. We'll see whether that experiment is worth it. But there are no plans to integrate radar into 3 and Y. Just as humans drive well, and in fact, an excellent human driver can drive with amazing safety simply with their eyes. The car will far exceed the average human safety just with vision, far. Because I mean, the car is looking in all directions at once. So we don't have eyes in the back of our head. So, the computer never gets tired and never gets distracted, get drunk, hopefully. So radar is, it's not, what really matters is how much does it affect the probability of an accident? And in order for the radar to be effective, you have to be able to do radar only braking, or you have to do actions that are radar only. Otherwise, you get this disambiguation problem between vision and radar. That's why we actually turned off the radar in cars historically that we had. All 3 and Y used to have radar, but we turned it off because the radar actually generated more noise than signal. Now, the Tesla designed radar is a high resolution radar that has some potential to be useful, but the jury is still very much out on whether that is in fact the case.
On the cost question, I guess from the vehicle side, as Drew mentioned earlier, we are always trying to engineer our products to be cheaper to make and more efficient to make. That comes obviously on the engineering side as we come up with new innovations, but as well on the supply chain side with our partners. We work with them to automate some of their lines, remove their bottlenecks and their high costs as well. On the logistics side, getting parts to the factory. It's not like a one thing that you have to attack cost everywhere. And we do it ruthlessly at all times. Operations efficiency, all of the above.
Yeah, I mean, I would say there's a whole longer list of things which we are chasing. We internally call it the cost attack, where we're literally going line by line and saying, how can we make it better? And it's a grind.
The grind.
It's a game
of pennies. It's like Game of Thrones, but pennies. First approximation, if you've got a $40,000 car and roughly 10,000 items in that car, that means each thing on average costs $4. So in order to get the cost down, say by 10%, you have to get 40 cents out of each part on average. It is a game of pennies.
We play it willingly.
We play it.
Yeah,
religiously.
We've done it many times. Even something as simple as like a sticker. There's too many stickers internally in the car that nobody ever sees. There's something as simple as a QR code. You might think, well, putting a QR code on a part, why not just put them on there? It's like, well, are we actually going to use that QR code?
Costs a penny.
Yeah, exactly. And then inevitably, sometimes the QR code doesn't go on properly, or you can't read it properly, and then it stops the line.
Costs more than a penny.
Yeah, absolutely.
So
it's chipping away with it. I mean, it does feel like digging a tunnel with a spoon at times.
Very much escaping prison.
Yeah.
On top of it, like we said, we did some factory upgrades, so we expect volume to go up. That would also bring some savings from higher production. But then on the flip side, we're going to be ramping a new product like Cybertruck, which we talked about. So yeah, so those are the real puts and takes that we are working through.
Yeah, but there's not like some accidentally, some brick of gold that we shot in the car, unfortunately. And it's, we're trying to be very rigorous about improving the quality and capability of the car, because it's like any fool can reduce the cost of a car by making it worse, and just deleting functionality and capability, and that's how cool this sort of the any fool. It's like if you want to like lose weight and you say, well, I need to lose whatever 15 pounds right away. Well, you could chop your arm off, but then you're sitting there with one arm. You're still fat. So it's sort of like, yeah,
You gotta work at it.
yeah, you actually have to eat less food and work out. That's the actual way. And
Doctor's advice.
yeah, it's not, super fun because food is delicious. And I personally am not I don't love working out. I know some people do. I wish I did, but I don't. Unless moving the mouse consists of working out, in which case I love moving the mouse.
All right, let's go to Colin Langham from Wells Fargo. Colin, can you unmute yourself?
Oh, sorry about that. Do you hear me now?
Yeah.
Oh, great. Thanks for my question. You said in the commentary that you're not going full tilt on the plant in Mexico until there's signs that the economy is strong. Can you continue at a 50% CAGR without that plant? And where would that come from? And any color on what you mean sort of not going full tilt? Could that plant get delayed indefinitely? Or what are we kind of talking about?
No, we're definitely making the factory in Mexico. We feel very good about that. We put a lot of effort into looking at different locations, and we feel very good about that location. And we are going to build a factory there, and it's going to be great. The question is really just one of timing, and I'm just going to be a broken record on the interest front. It's just the interest rates have to come down. Like if interest rates keep rising, you just fundamentally reduce affordability. It is just the same as increasing the price of the car. So I just don't have visibility into it. If you can tell me what the interest rates are, I can tell you when we should build the factory. We're going to build it, and I think we'll start the initial phases of construction next year. But I am still somewhat scarred by 2009, when General Motors and Chrysler went bankrupt. So, well, that's now 14 years ago. That is seared into my mind with a branding iron. Because Tesla was just hanging on by a thread during that entire time, and and we closed off a financing round in 2008 at 6 p.m. December 24th, Christmas Eve. And if we had not closed that financing round, we would have bounced payroll 2 days after Christmas. So we actually closed that round on the last hour of the last day that it was possible. Stressful, to say the least. And then barely made it through 2009. So I'm like, I don't want to be going at top speed into uncertainty. A lot of wars going on in the world, obviously, as well.
And we have room here, like in Giga, Texas. You said we still have room in this building. It's not full with Cybertruck and Model Y, and there's plenty of growth opportunities still to have inside the building where our team already is.
We also have 2,000 acres here.
There's also a bunch more.
We're actually only occupying a tiny corner of the land that we have. But we could technically do all the scaling necessary just here. Personnel is our biggest challenge, and in that the greater Austin area only has, generously, the greater Austin area only has 2 million people. So people are moving here and they're willing to move here, but there is somewhat of a housing crisis. They got to live somewhere. So, yeah.
Okay,
yeah, so I don't know. I mean, I'm just curious. I'm not saying things will be bad. I'm just saying they might be, and I think Tesla is an incredibly capable ship, but it is. But if we need to make sure, like, if the macroeconomic conditions are stormy, even if the best ship is still going to have tough times, the weaker ships will sink. We're not going to sink, but even a great ship in a storm has challenges. Now that storm will apply to everyone, not just us, and not just the auto industry. It apply to everyone, I think. So apart from necessary sort of staples like food and stuff, but so I don't know. If interest rates start coming down, we will accelerate.
All right.
If anybody's got any guesses on this, I'd love to be less wrong. And I apologize if I'm perhaps more paranoid than I should be, because that might also be the case, because I have PTSD from 2009, big time. And in 2017 through 19 were not picnic either. That was very, very tough going. So, the auto industry is also somewhat cyclic. It's because, people tend to hesitate to buy a new car, and if there's uncertainty in the economy. So it's, car companies do very well in good economic times, and they don't do as well in tough economic times. So it's just, whereas if somebody's selling bread, then I think, that people's willing to have bread. Yeah. Yeah, you need bread. You need food all the time. But new car, you don't have to have bread this minute.
Especially if there are wars going on, and then that impacts your sentiment.
Yeah. I mean, if people are reading about wars all over the world, buying a new car tends to not be front of mind.
All right. Unfortunately, that's all the time we have today. Thank you very much for all of your good questions, and we'll see you again in 3 months. Thank you very much.
All right. Let's get this off of here.
Wow. That was pretty interesting. That's a lot of information. I'm just glad he's the CEO of Tesla. That's all I gotta say.
There we go.
It literally hadn't occurred to me, but yeah, you would have PTSD from going through that kind of experience in 2009, where you're about to watch everything you've built fall apart. That would stick with you.
Yeah. I like the analogy he made with the ship. He's being very cautious in this time. What did he say? He said he won't start the groundwork for Mexico if next year is also very what's it called? He said something like that.
If the interest rates remain challenging, but what I think I hear him saying is he won't go Giga Shanghai speed unless it does, but that they will continue nonetheless.
I think he said they're gonna break ground next year. But yeah, like Brian said, they're not gonna go full force until the interest rates come down, because think about, the factory is the actual product. That's the product, the machine that builds the machine.
Yeah.
And while interest rates affect a consumer buying the vehicle, interest rates are still going to affect them in purchasing the materials they need for the factory. So it's going to be way more expensive for them to build the factory as well, with interest rates as high as they are.
Well, why though? I mean, they don't finance that; they pay cash.
They could pay cash, but we have seen in the past that they still have financed things as well. So, you know, and Elon's not opposed to taking on loans as long as they're wise. And right now, it's not a wise time to take on any loans.
Sure.
Yeah.
So during the call, you had said, well, they're going to be making the cars in Texas.
Yeah,
and I know
yeah.
that was a popular notion that sprung out of nowhere in the book
Yeah, no,
that we've never
Elon,
heard before or since. Because the whole point of, well, first of all, there's no space already built to build it in Texas. They would have to build new space for it. Fitting it into the factory itself, they would have to dig up foundations. They would have to presumably clear floors out of the way. That's the whole thing about it being a purpose-built factory, is it's got to be the right shape. Otherwise, they would just hermit crab their way into existing buildings, and we know that that's not sufficiently efficient. And then you've got there's no evidence that it's being built. But then the question becomes, why would they build it in Mexico in the first place? And the answer has to do with free trade agreements, where the U.S. can export duty-free to 20 countries. Mexico can export duty-free to 50 countries, most of which are in places that this car would be targeted for. The developing world, the Trans-Pacific Partnership, which we famously backed out of, and there's another one with all the other Latin American countries. This is the primary market for it, and if you build it in Texas, you wouldn't be able to export it there. So the thing I heard was that it would be a pilot line, which is very common for every company,
that would make sense.
But
because, I mean, in the book, Elon did say that, you know, that's where they decided that it was going to be done in Austin, because that's where the engineers are, and moving all the engineers down to Mexico wouldn't happen. But as you're pointing out, the pilot line would make sense to at least get it off the ground and running. And my thought on it was, getting that initial thing off and running in Austin makes sense, because then when they do build the factory in Mexico, any kinks that they've worked out and say, hey, our original plans for Mexico could be tweaked and become even better by doing it this way, might actually benefit them even more in the long run.
And remember, in one of the slide decks, what was it, a quarter or two ago, we saw the pilot line of the Cybertruck, and that was clearly in Fremont. You could tell because it was in a sprung structure, of which there were none at the time in Texas. But they didn't produce any saleable units out of the pilot line. And I know at least Ford would build pilot lines for their factories in Mexico, get it all dialed in, ship it down there. They wouldn't actually produce any saleable cars there. They might make a handful and crash them or use them for diagnostics, but then they just go out in the dead lot where they sit for a few years until they actually get around to scrapping them.
That makes a lot of sense too, because, and I mean, obviously Mexico makes a lot more sense for the mass production of this for a multitude of reasons. I just figured they would start it there, but the pilot line does make a lot more sense to at least get the initial kinks and bugs worked out of it in the pilot line with the engineers right there on site to get all that worked out. Okay.
Yeah. And it's a bit of a ways out of town. It's not like you have a hotel next door that you could just use. If you look at, even at Reno, there are a couple of hotels that are nearby, but they're very small and they're always full, probably because of Tesla and other companies in the area having any need at all for them takes them to capacity and beyond.
Yeah. And then by then they'll have the semi-truck more up and running so they can transport materials that they need down to Mexico.
I hope so. Come on, man. Get that thing going.
Yeah, that's still in pilot production per the slide deck this time around.
Yeah. Well, we need to see them build out the factory, and they have yet to break ground on the expansion of Giga Nevada, which is where it's going to be built.
Oh, yeah. And, you know, and just as Elon and they had pointed out, you know, coming to, you know, if the compact car, the next generation vehicle is, we won't call it delayed, but not coming out, you know, production probably starting in 2025 versus 2024, you know, they still have, as they said, Shanghai still isn't even fully ramped yet. You still have a lot of room there to grow. You still have room in Berlin and Austin, which have barely even hit the goals that they want to hit there. So still tons of room for growth in all their factories right now. And they can still squeeze more units out of Fremont. Plus, it gives them more time to get the batteries up and running. And like you said, 4 lines are coming up for batteries in Austin for next year. And they're only on the second line right now, which is dedicated strictly to the Cybertruck. So all those batteries that they're going to need, you know, and this is what Elon had pointed out previously too, is when they were supply constrained, there was no point in pushing out a Cybertruck even faster because they wouldn't have the materials for it. So if they try to push out a compact car that's going to be mass produced, but they don't have the batteries for it, what's the point?
if we're going to make 2 million of something, even with a 50 kilowatt hour pack, yeah, that's a lot of cells needed. And yeah, the good news to me that I heard there, my big takeaway was, I knew that there was at least 3 battery lines. I didn't know there was a 4th, but I thought all 3 of them were being improved in parallel rather than, it sounds like they got one dialed in almost all the way, and now we replicate.
Yes.
And if that's the case, we're going to see the ramp speed increase nicely.
Yeah, and they did confirm that it's all 4680s that are going to the Y for the first line, and the second line is all for the Cybertruck.
Which is interesting because I thought they had discontinued the 4680 version of the Model Y, but
yeah, that's what I thought too. So,
but I'm not going to call them liars. I'm not prepared.
Oh man,
so that's interesting.
And so, where's the stock price now? I was hearing it's like at 234 now. So,
yeah,
and we talked about it before, you know, like we were waiting for the call to see how it was going to happen. And I think a lot of that, and again, all of us on here are long-term anyway. So the near-term price movement means nothing to us other than buying opportunities. But this is something I had mentioned before, is as soon as we get that confirmation about how slow the Cybertruck ramp is going to be, and Elon's been saying it all along. He's never once said we're going to come out of the doors, you know, blasting with the Cybertruck production. He's been telling us all along it's going to be slow and it's going to suck. And now he's giving us that indication yet again. So, of course, the next vehicle that's going to come out for them is going to be slow. So the profitability is going to be bad. And they're still going to be seeing a lot of expenses versus income coming from this vehicle. So the market's not going to like it. You know, we knew this was coming.
You know, but the beauty is, Peggy and I are going to like it because we are still trying to accumulate more shares.
Yes.
And there's only so much you can load the spring before it becomes inevitable. Short term, anything can affect it. Long term, it's all about fundamentals. And this is, you know, planting seeds. This is literally planting seeds. We're years from harvest, but when that harvest comes, baby, it's going to be a doozy.
It's going to be awesome. And I like the fact that Elon Musk, he mentions how he's being very careful in this situation, this environment. He keeps stressing interest rates over and over. And it makes sense because most people don't buy vehicles flat out cash. They go through financing or leasing, and that is driven by interest rates. And if interest, like I know people back in Toronto where just mortgages, right? They used to pay $2,000 a month. Now, you know, mortgages are like more than double. They're paying $6,000 a month. They're like, how am I going to get the money to pay my mortgage? And only like maybe a few $100s is going towards the principal. The rest is all interest. So it's just like the guy's like, I got to figure out $6,000 for the next 90 years. It's crazy. It's crazy. And that's imagine with cars, right? I mean.
Oh yeah, and a lot of these people who have this and these high payments, they're, you know, robbing Peter to pay Paul for it, and you can only do that for so long until you break. And that's the problem that people are running into. And again, that's why Elon keeps saying interest rates, interest rates, interest rates. You know, as much as we want to say advertising can help or whatever it is,
it's not.
I mean, you got to lower the price. You know, Elon, and I got to say Elon's been getting better and better every earnings call, and this one here was. Like there was literal no fluff. There was nothing of, hey, this is something you're going to get excited about in the future. This is the reality of the situation. You know, some people are getting really excited, but I want to make sure we subdue your expectations because it's going to suck. And I'm glad he was extremely open and transparent about it this time.
Yeah, no, absolutely.
I did like the whole, when is Highland coming to the U.S.? Oh, after 10 minutes of talking about new products, I don't talk about new products. You guys
shut down entirely.
Come on. Okay.
We'll tell you about when the next generation platform's coming out, when the Cybertruck is coming out, but not the Highland that has already been released. We're not going to tell you about that.
It's like that scene from Airplane where he says, we're going in at 0600 hours. We're flying in low over the enemy. We're going to do this. Oh, when will you be back? That's classified.
You know, and go back to the stock price, thinking about how, you know, obviously interest rates are higher and everybody's expenses have gone up significantly. If we told you that, hey, by the way, your groceries are all going to be on sale for 20% off, would you be upset? No. And now here we are looking at Tesla stock price being 20% off. Why are people upset? Like, I get it because it's the equity and it's your portfolio and it's your money is now, it's your possession, which is now less. So it's not what you're purchasing. I get that. But if you're looking at it from a long-term investor standpoint, that's not the mentality you have. You're buying steak that was $10 a pound and it's now $8 a pound. Yes.
Yeah.
Go ahead.
Yeah, no, I'm just elaborating on Tim's point is that, look, this is a long-term thing. You know, I mean, look, if you were in the stock that you thought this earnings calls to jump like 10x, come on now, like, come on, you gotta, just be a little realistic a little bit. This is a long-term thing. We're probably not gonna see Tesla pop. I know it's gonna sound pretty crazy. Maybe to 2026, 2027. Maybe 2028. Nobody knows. Maybe when FSD gets solved. You know what I mean? Like, no one knows. But eventually,
and you reach a point again where the fundamentals just become insurmountable. You can't ignore them anymore. And we're watching the margins stay strong while they're growing, while they're increasing unit sales, while they're deploying more mega packs. You know, at some point those numbers just become too big, and they're working to try and keep in-house some of the more profitable things, keep their own mega packs when they can, operate them themselves. And, those will all, at some point you're looking at the price earnings ratio and going, yeah, no, it's a bargain.
Yeah. And look, sorry, Tim. Yeah.
So, and like looking at, like he said, 2009, when GM and Chrysler both went bankrupt, looking at these companies who spread themselves too thin, he doesn't want to do that. I would rather have a CEO in a company who's going to be ultra conservative, but still grow at the same time to protect themselves against the potential. Because what is the worst case scenario is we do have everything collapse. Tesla's good to go because they've got the money. What's on the other side? What if it doesn't collapse? All right, cool. They still have the money. Then they can just deploy it sooner. And that's all it is. So either way, they're protected. They're just waiting. It's just a waiting game. That's really where we've been at for the last year and a half, is just waiting.
Yeah, and the more this interest rate gets prolonged, the harder things are going to get. Yes, inflation comes down. Yes, costs get stabilized. And I do think, I think we are in this weird economy where if we do reduce interest rates right now, inflation is going to go back up again.
Yeah.
And it's a very, very mucky situation. And I'm afraid, I'm not too sure if we're going to have a soft landing unless we have the same amount of interest rates for the next 2-3 years. It sounds terrible, but the way how things are, it looks like interest rates are going to be here for some time. And I mean, for me, as a long-term Tesla investor, that's more time to add, shares to it. I know as soon as interest rates go down, maybe what is 7% right now? If it goes to 3-4%, man, you're gonna see people get more relieved. You're gonna see people have more cash available in hand. Then they can go like, oh wait, I want to buy a new car that I've meaning to buy for the past 3 years. What's that electric car again? Oh, Tesla, that's right. Let's go. Oh wait, how much is it per month? 200, 300? Oh man, let's go for it. And you just imagine the explosion of sales. And then at that time, you probably have full self-driving coming up. Oh man, it's gonna be an explosion of year that I'm looking forward to, that I'm kind of betting on. So yeah.
So back to Tim's analogy of the steak at 20% off. I only buy turkey in the lead up to Thanksgiving when it's on sale, and a lot of times you'll get it for very cheap. But that only helps me because I have a freezer, because I'm not food insecure to a point where I have to eat it today. There are a lot of people who are not yet in that position, and I feel for them. And like you were saying, if your rent is $6,000 a month or your mortgage is $6,000 a month, you are financially insecure. That is unsustainable for you. Yep. And it's like, well, great. Now what do I do? Go out and try and get my income up another $10,000 a month. Oh, I never thought of that. And right, but it's tough. And if you cut rates too aggressively, you kick inflation back. So that whole balancing act, I don't even think about it because it's so far, no matter what my beliefs were, there's nothing I can do to change it. I just have to be as prepared as I can and hopefully move forward from there.
Yeah, and the hard part is, especially with the wars and the oil prices going back up, oil is going to create more inflation as well with the oil prices going back up. So to Peggy's point, cutting interest rates now is just not going to be wise. And I talk to a lot of people and they're asking me, well, if the Fed maybe goes up 25 basis points more on interest rates, we're basically at the top of where they want to be. Why are we so concerned about them holding rates higher for longer? Talk about holding a plank. Getting into plank position isn't that hard. Holding it for 30 seconds, not too bad. Holding it for a minute can be challenging. You start holding it for 2, 3, 4, 5 minutes, you're probably going to fall. This is exactly how it works with interest rates. You hold them high for a long period of time, people are going to start crumbling. There's businesses that need money out there, and they have to take on loans to get their businesses moving forward. They can't afford to be taking on loans at 6 and 7% interest rates because they will not be able to pay them off and they're going to go bankrupt. That's the problem.
And the reality is 6 or 7% is what Walmart and Tesla are getting. That's not what small businesses are getting. They'd be lucky to be under 12 to 15 in this current environment. And that is crippling. That is crippling when just 2 years ago, I mean, the base rates the Fed rate was around 0. And now it is not.
Yeah. And it was basically 0 for almost a decade. And then they went up in 2018 and the market freaked out and they kept going up and they dropped it then. And then of course it was going back up until COVID and they dropped it to 0 again. So the businesses that were smart took on the loans that they could when the interest rates were super low this time around. Obviously, Elon and Tesla recognized this because they've been through it, which is why they paid off all of their debt. It's all gone. No more debt. No need to take on loans at high interest rates.
So do you guys think we're gonna get into to some point of a recession? Because that's probably going to be the only thing that we can bring down interest rates to reasonable levels.
So just looking at the yield curve alone, since 1967, every single time the yield curve has inverted, we have gone into a recession as soon as it reverted. So we've been inverted and we haven't seen the signs of it coming back yet, but usually it reverts. And then at that point, the Fed has to do something to whatever's going on in the macro environment. It's different every single time, but the factors that lead to it, because they use lagging data, ends up coming out where the Fed has to react to what's going on in the macro environment. So in the middle of us seeing a severe downturn, that's when the Fed pivots. So I do see it coming. Some people are predicting Q1 or Q2 of next year is when we're going to see it. I do think it's coming.
I don't have an opinion on it. Again, it's so far out of my control that stressing out about it would do me no good.
No, you're absolutely right. And Warren Buffett says the same thing. He goes, I don't concern myself about the macro environment. I look at a company. I think if they're a strong company and I see them at a good value, I buy them. Done. That's it.
Mm-hmm. True. Yeah.
Anything else, boys?
I'm good. It's like 2 a.m. where
I know it's late for you, Patrick.
Yeah.
And it's like late afternoon for Brian.
I think I'm pretty good. Yeah, it is. What is it? 4 o'clock, but I've been up since very early. It's my big exciting day. So,
oh yes. Yeah. It's one of your 5 Christmases of the year.
Mm-hmm. Yeah, that's right.
And I guess Dan is saying that they are digging foundations in Texas factory.
Well, that's to extend to the south of the building, but that would not give them the kind of space they would need to replicate an entire line.
Right. Yeah, and they're constantly doing it.
Smaller.
And as Elon said, they've got 2,000 acres there, so they're just on a very small postage stamp portion of it at the moment. So we know a lot more is coming to Austin. That's not even
it's a lot of postage stamps already on it. They are definitely trying to chew through it, and it's just, it was fun when we were tracking the progress, and people would say, "What are you going to do when it's done?" I said, "Do you know how Tesla factories work? They don't stop building until they run out of land."
Oh my God! Like we might not even be here.
Every inch of Shanghai is covered in pavement or sidewalk or a building. The same is true in Fremont. They had to tear stuff down to put stuff up, and so Texas is gonna be going for a little bit.
Oh yeah. All right, boys. Thank you so much for joining us. Everybody, thank you for joining us on this live stream as well. If you guys do not follow them, follow Peggy on his channel, Brian on his channel, My Tesla Weekend, and Curious Peggy. Follow them on X as well. Otherwise, earnings were acceptable. They were fine.
They were fine. Yeah. Thanks, Tim. Good to meet you, Peggy.
All right,
Thanks.
guys.
Thank you, Tim. Nice to hear you through Brian.
Have a good one, guys.